All right, everybody. So we are live. This is going to be fun. We're going to make this, mega stream as much fun as possible, even though it's going to be kind of a gloomy earnings call as we're all expecting. This is going to be live streamed in multiple channels. We're going to have Brian Weiss feature Aza. We have Nick Gibbs investing against the grain, and we have Farzad's channel as well. So, guys, this is going to be an epic kind of long time that we're sitting here. We're going to be doing a pre-earnings call. We're going to listen in as soon as they actually drop the report. We'll analyze that like we normally do, and then when the actual earnings call, we'll listen in on them, and then we'll do some kind of post coverage as well. So here we are. Welcome everybody. We've got Farzad, Yashu from his channel. Yeah. Hit that bid, and you got Nick and then
Finally.
Hans. Welcome everybody.
Yeah, thanks for having us all together. It's always fun to talk before earnings.
Yeah. So why don't we start with the first question, right? So this is going to be quite a unique call. Typically every time an earnings call happens, people will say this is the most important, event that's been for a while. It is kind of true this time, right? Because this is in setting up prior to the vote in the annual shareholder meeting, which is incredibly important for Tesla. What do you guys think? Why don't we start with, go around table here and start with you, Farzad?
Yeah, I think this being the call before that shareholder vote is an important one. I saw Kevin made a post a little bit like a few minutes ago saying that this is a very important call. That's one of the main reasons why, and I agree with that. I think the way I think about this call is it feels like it's going to be one of the most interesting ones in a long time because you have this Q1 print that was not good. It was a poor Q1 print. Tesla gives primarily reasons that are tied to supply chain. However, if you look at the broader market, especially in places like China, there is a clear lessening of sales of EVs in that region. Not to say that this is a long-term trend, but short-term, there seems to be that sort of drop. So that impacted Tesla sales to a certain degree as well. But I really think the overarching theme of this call, like the print is not going to be good. I think my number for the quarter, I have it at 36 EPS, so 36 cents EPS, which is diluted excluding stock-based compensation. So GAAP diluted would be 23 cents, which is actually below consensus. And the reason why I think it's going to be, it's because they printed the lower delivery number in Q1. You're going to have a higher mix of Cybertruck against the profitable 3 and Y, the very profitable Y, and then the S and X mix is lower than Q4. So all those things combined, plus you have a Model 3 ramp in Fremont that wasn't going according to plan. You have less sales in China versus the previous quarters, which has a lower profit mix. So all of this is going to sort of create a scenario for Tesla to have a pretty poor earnings show. I think I could be wrong, but that's what I think is going to happen. But then you have sort of the saving graces in energy. So they had a record print in Q1 as far as how much they deployed, but it's weird how that shows up in the P&L. It seems to be kind of lumpy. So I'm curious to see how they're going to do that. You should also have the recognition of deferred revenue for FSD potentially in this quarter as well, but that's a one-time hit. I don't think analysts are really going to care about that. But the most important piece of this, I believe, for Tesla investors is what kind of Elon Musk shows up at the call. Mm-hmm. I think it's going to be a very interesting one. Matt Smith, and I hate to give Matt a compliment, believe me, because I really don't like the guy, but he has this great impression of a depressed Elon Musk on the earnings call. I think that the last one was from Q4 or Q3, and if that Elon Musk shows up, I think again, not investment advice. I don't have a crystal ball, but that seems like that will not be a good thing for the stock at all, because there's already an understanding that there's going to be an issue with sort of how Tesla's operating in the last quarter. But what I do expect to happen is I do think we're going to get a much more aggressively positive in the long-term outlook of the company type of Elon Musk, that I think is going to try to reframe the company again he's been doing this since Autonomy Day in 2019, really, where he's trying to get people to view the company not as a car company, but as an AI company, as a tech company. And I think that's going to be a lot of what we're going to hear on the call, especially around FSD. Maybe we'll get a little bit of insight into how they're thinking about robotaxi, but that's how I think the call is going to go. So we'll see.
All right. Well, thank you so much, Farzad. That was great. Welcoming to the panel here, we've got Emmett, we've got Matt Smith, and we have Jeff Lutz as well. Brian White from Futurosa will be joining us very shortly. So we're just going through the round table here, and I agree with Farzad and everything he said. The only thing I would say is that, I am not expecting a gloomy, depressed Elon. I think he's going to be much, much more excited, especially with FSD coming to the front. And he's going to be speaking about that and AI and robotics and, the compute power that they have. We're going around the round table. Let's start with you. Start again with you, Yashu.
All righty, let's do it. Welcome, everyone. I hope everyone's doing well. Let me know in the chat where you guys are tuning in from. I always like seeing the wide variety of people I know that we have in here. I think we're in an interesting crossroads, right? Because if you kind of just step back and you look at S&P inclusion Tesla before they started being profitable, you had a lot of investors, a lot of people actually on this panel that believed in Tesla, even though, let's say, gross margins were where they needed to be, cash flow might have not been where it needed to be, profitability wasn't needed to be, but they saw the tech. And then you had more of the new school investor that came, let's say, post S&P inclusion, that growth was more projectable. You could look at the bottom line, you could map out margin increase, you could map out a very Wall Street-esque type of business model on Tesla. And it seems like we've reverted back, for better or for worse, it's just where we are currently, to almost S&P inclusion in the economics of Tesla. They've retreated back. Elon said they're ready to go down to as low they need to go on margin to push as many cars out in the name of software, in the name of FSD. And so that you kind of have this dichotomy of investors a little bit, I think. And I think it's quite interesting if you just step back and you look at it, because Tesla's economics, Herbert, like you said, it's going to be probably gloomy. Even like James Stevenson, shout out to James, I cannot underscore enough on Twitter. He's actually projecting a really bad quarter, just a quarter, but even potentially a negative EPS print. So who knows what's going to happen? But it's kind of a wide variety of angles to look at this. But I agree with Farzad when he says, and this doesn't happen often, me agreeing with him, but I agree, Elon's demeanor is going to do a lot with where we see potentially the Tesla narrative, because Elon needs to have a vote on his compensation plan coming up. We know back in was it end of 2021 or beginning of 2022, where Elon talked about the Tesla robotaxi and why compact wasn't even a good idea to talk about right now if robotaxi is all that matters. And we saw how Wall Street reacted post that. So there's going to be a million narratives, I think, coming out of today. I'm not sure which one is going to catch the mainstream media or what's going to be the leading headline out of it. But it's going to be one that I think a lot of people, not just Tesla investors, a lot of people on Wall Street are going to be paying attention to.
Well, thank you so much, Yashu. Let's get starting with you, Hans.
Yeah, a couple of the things that I'm interested in are definitely, the tone is a huge one, but also I'm curious to hear directly from Tesla more about the logistics issues and what they expect. Do they give guidance in Q2 for essentially delivering the same number of vehicles as produced? We know that the rest of world deliveries for Tesla are something that takes a long time to get to the destination, and some of the production delays that we had this quarter, I think, really had an outsized impact on deliveries compared to production. And so I do want to see guidance for that, to see how much we can expect to see them catch back up in Q2. That will be a big one on the automotive side. But really, to me, the overarching narrative boils down to what is the expectations for FSD. Now that Elon has said that we're pushing hard and going balls to the wall for autonomy, does that, we need to hear more from management about that decision and the justification for that decision. We've heard some commentary on X But I would like to definitely hear more from them directly on those points as well. And, hopefully give us some sort of expectations for the robotaxi reveal on 8/8. What are they wanting us to know today to get prepared for that? Those are some of the huge things that I'm kind of keeping an eye on. Obviously, want to also track the deployments and progress for the energy side of the business as well, since that's a big and growing area. And I think all of those combined really help me to keep my finger on the pulse of how the fundamentals of the technology and the growth of the core part of the business is going.
Okay, wonderful. Nick.
Yeah, so I don't want to repeat everything that was already said, so I'll just take a little bit of a different angle. I actually think that what we're going to see from today isn't a true representation of just Tesla. I think if you take Tesla and you zoom out and you look at the broader macro, you look at other auto manufacturers, you'll see that they're actually doing pretty decent, even despite what happened with all of the delays and all that. And the reason I say that is you can use GM as a proxy. GM, on the surface, the numbers look good. Much like every month, the jobs numbers look good, right? But then when you start digging into the numbers, you start to see, okay, there's a lot of channel stuffing. You see China's hurting for them. You see their EVs hurting. The only thing that really saved them are their trucks. And all that's going into the channel. And so now those days of inventory are rising. And so I think you're just seeing a very interesting proxy here. And again, you can tie that back to the general economy where you see these jobs numbers that come out and they look amazing. And yet every month, it seems like there's this crazy revision to the previous month's numbers and the previous month's numbers. And so it's just very interesting that when you see Tesla here and everyone's making this a EV thing or a demand thing or just a Tesla thing, but it's really the broader economy that what I'm seeing. And the last thing I'll say, because I really don't have anything else new to say about Tesla because it's all been covered, is that if you just look at the trend on how GDP is growing, there's this huge correlation. I'm not saying it's all this, but it's a lot of it is government spending, government job growth. And so, I hate to say that things are being manipulated, but it is an election year. And, regardless of your politics, this is something that we tend to see frequently. So there's a lot here to lend itself to the economy's not as strong as people really think it is. And I think that's what's happening with Tesla and I think just in general. So I'll pause there because I agree with everything else everyone's saying. And happy earnings day.
Happy earnings day. So before we go around the round table, let's have a little panel discussion here. Today, the stock went up by $2. Just a quick round table here. Who thinks that the stock's going to go up after the earnings call tonight or after hours or tomorrow? Who thinks it's going to fall? It's almost always fallen. So let's thumbs up if you guys think it's going to go up. Nick. Oh my gosh. Okay, thumbs down. Who thinks it's going to go down? So everybody else? Yeah.
What's with all these no votes? Matt, what's your vote?
Yeah, I guess I don't care about the short-term stuff as much.
Wow.
That's not what he asked, Matt.
It's called fun, Matt. Fun.
Fun? No, I've got too much responsibility to have fun anymore. 6 kids,
All right.
It's all serious. Very serious stuff.
Well, because of that, Matt, you're going to come last. So we're going to go next to you. Jeff, you're next up here.
We going back to the original roundtable, Herbert?
Yeah, no, go ahead and ask just your intro and what you're thinking of what's happening.
My name's Jeff. Yeah, I think it's great to be with everyone on the panel too, by the way. I'll get right into it. Tesla's supply chain, the network latency is actually probably the shortest supply chain in the auto industry. Why am I saying that? Nick kind of hit on this a bit. What you see happening with Tesla over the last year was the canary in the coal mine for what's happening with the rest of broader macro auto. What you're seeing now, you're seeing the higher end vehicles, Porsche, they're doing a lot of significant price reductions. You're seeing days of inventory growing both on EV and non-EV side to really back to pre-pandemic levels. And those weren't necessarily healthy levels. The pandemic actually helped the auto industry flush a lot of, really high days of inventory out. So Tesla saw this stuff earliest, and they adjusted in the earliest manner. They did a headcount reduction back in June, I think, of 2022. Then they went in and they did the COVID price corrections faster than the other companies because they recovered faster than the other companies. So why am I bringing all this up? I think they're going to come out of this faster than the other auto companies, and some of the other auto companies may not make it or may massively transform. But who cares about them? This is Tesla earnings day. But I think it's relevant to kind of like what's happening now and what's going on. They're seeing these things first. They're taking actions a little bit quicker maybe than others. We can argue with what the actions are and how they're approaching it. But I think they're seeing things more quickly than others, and they're taking action more quickly than others. And it goes back to actually having very short network latency in their supply chain. COVID correction came in faster. Supply replenishment came in faster. The price reductions inbound came in faster. All these things came in faster for Tesla, and it's going to help them in the both the short, medium, and long term. Finally, I would just say on Q1, Q1 does not fit neatly in a 160 character tweet. There were definitely supply issues. There were supply timing issues. There were stranded inventory issues, and I'm sure there are pockets of demand issues as well, to be fair and balanced. But to say that 386,000 cars is all that anybody would want from Tesla is actually an incorrect statement. There's unconstrained demand for the Model 3. There's unconstrained demand unmet for the Cybertruck. And if you study the Berlin issue, if you study the Red Sea issues, those supply timing issues, they won't reach the end of their network based on the time that the outage was in the factory. They didn't really have a chance. So then you build stranded excess supply. And again, I'm not saying there's not demand issues in regions too, but to me, like, there is a story, and I think Hans hit on this a little bit of like, maybe they should quickly go through that and like, are these problems solved or not? Because I just went in to configure a long range Model 3 in the US, and if you want white seats, you're out in July. So have these problems been resolved? Have the workarounds in place, and what does this mean for the coming quarter? I think that's a logical question. And then finally, how are you going to transition us from a predominant hardware company, which we know they've been investing in software and network infrastructure for a couple of years, many years now, but how are we going to make this transition? And you don't have to lay out a detailed milestone. This isn't a product release call, but some of the finer points, kind of a finer outline, may be helpful to hold everybody over until we get to the robotaxi unveil.
Thank you. Emmett?
You're on mute.
You're on mute.
It's been too long.
Can you hear me
He's
now?
rusty.
Yeah.
I'm a little rusty. Yeah, instead of happy earnings day, we should be calling this sad earnings day lately. It's been a rough few earnings down after every earnings. But maybe this will be the one that turns it around. I feel like there's so much bad news priced into the stock recently. How much worse can the sentiment get? I don't know. But I think two things about this that I'm very curious about this earnings report and the call especially is, number one, this June 13th vote is very critical for the future of Tesla, and Elon knows that. And I kind of feel like he needs to be on his best behavior, like what Farzad was saying earlier, like which Elon are we going to get, the kind of sad, depressed Elon, or the one that's like bitter and just like boneheaded question, the guy that's kind of FUing everyone, or is it going to be, the sales, not the salesman, but just like the optimistic Elon, pushing for the future, like trying to get everyone excited Elon. So I'm hoping it's the latter, because I think he knows this is an important, almost like a mini interview or something for institutional investors to evaluate him a little bit more, as a tangential observation when they go into this vote, along with all the other nuances they consider for their votes. But the second thing is, the most important thing is reframing Tesla from an EV manufacturer of 30% plus margins that's growing with infinite demand. That was like the investment thesis, 3 years ago when the stock popped to like $1 trillion plus valuation, and that investment thesis is long gone by itself. I mean, it could get there again, but we've sacrificed so many margins with price cuts over time, and the demand is still there, but we're growing production much faster than demand in this economy, it seems. So that investment thesis along us is reframing the investment thesis now to being an AI, real world AI, FSD company, full self-driving robotaxi company. So the most important part for that reframing to me for investors is money, right? And the subscription take rate. And so I wonder if we get any indication of the success of full self-driving subscriptions, signing up already, even though their 30 days aren't over, for example, of the free trial, let's say. So, or maybe there's some kind of statistic they let out about, the people that, now that since they've been requiring every delivery to also have a demo of full self-driving, maybe in the past only 5% of people were taking or using full self-driving, but now like over half the people who take delivery are using full self-driving regularly. They can tell from their stats or something. So I don't know, any kind of statistics, any kind of numbers around the full self-driving subscriptions or take rate, I think would really help reframe the investment thesis on Tesla.
Thank you. And Brian, you're on mute. We can't see you, buddy.
A lot of great points. A lot of great points there. Yeah, a lot of great points there. I'm looking for Megapack. I'm looking to see some numbers. We know that there's a lot of deferral on how long it takes to get paid on some of those systems. I think that's going to be exciting to look at. When it comes to days of inventory, Jeff and Nico both hit some great points there, which is when GM overbuilds for the supply, builds up days of inventory, it doesn't show up as an expense. It shows up as profit, even though the vehicles are not delivered. When you're selling directly to the consumer, like Rivian or Lucid or Tesla does, the buildup of inventory stays on your books as an expense, but not as income. So it creates a little bit of distortion trying to compare these companies side by side. All of those things are going to weigh down on the books a bit. I do hope we see some information on take rates, like Emmett was saying. I don't know that we will. I'm hopeful for that. I'd like to see, ideally some guidance, especially on things like Megapack. We know there are a lot of myths about affordability that just don't make sense. I have people leaving comments every day saying, well, this is still so much more money than a Honda Civic base model. Right, it's not the same car. I don't know why you'd compare it, but even if you are, it's only a few $1,000s more for a whole lot more car. So I don't know how we get these stories told, these realities out there. So there's going to be a lot of stuff going on. Some good news. I'm going to drop off here in a second because the power just came back on and I can go back into my studio, pictured behind me there. So
thank you, Brian. All right, we'll go with you, Matt.
Yeah, thanks. So maybe I'll just pick it up on where you were asking about the stock price. So I said, I don't care, and that's maybe only partially true. I mean, I definitely am optimistic and want things to go up in the long run. But I think where I'm seeing sentiment right now, it's hard to imagine sentiment getting much worse than it is. And generally speaking, in Tesla's history, when like things get this bad and you've got like, the bulls stabbing Elon in the back and people selling out of their position altogether. I was looking just in the comments here, a bunch of people saying like, oh, like this is gonna be horrible. Worst earnings ever. Like Tesla's gonna go sub 100. I'm seeing a lot of this on X and on YouTube comments right now. And I think generally when sentiment is this low, that tends to be when the surprise happens. Now, this is not financial advice. And I like I said, I actually don't care so much about what happens in the next 5 days, 10 days, but I think the longer term trajectory is actually looking pretty strong. So in terms of this earnings report, like I don't think it's going to be that bad. I think Wall Street for the first time in a while is actually pretty close to where Tesla's likely to report. I don't think this is going to be doom and gloom. Yeah, it was the deliveries were very bad. Everyone knows that. My sense is everyone really knows all the bad news that's already been priced into the stock. And of course, there's uncertainty around where our delivery is going to be for the rest of this year. And that's very real. I don't want to paper over that. But Sam Corris had a great tweet the other day that, you've got the secular trend, I'm going to kind of butcher the tweet, the secular trend of EVs displacing ICE vehicles in a cyclical industry, which is, vehicle sales. So we're in this cyclical depression of auto sales being down, but the overall trend of EVs continuing to gain market share is still very much real. So I think in the call it the next 12 months or so, we'll get over this hump and Tesla kind of resume the growth trajectory. In the meantime, like a year ago, everybody was losing their mind about AI. Tesla, we all know, is an amazing AI play, but it's getting no love on that story. So we've been tracking Tesla's progress on FSD for a long time now. It was never really ready for prime time. And frankly, I would say Tesla was anti-selling it with the high sticker price and no free trials. And that was a smart thing to do because frankly, it sucked for a long time. Now, but for the first time in history, Tesla's actively like marketing and pushing FSD. And that's a very big deal. And I think for those reasons, I'm actually expecting more of the upbeat Elon to make his way onto the earnings call today. I think there's a good possibility that they share some of the stats that Emmett was alluding to. And I completely agree. I think if they share any stats around the amount of subscriptions, like paid subscribers that they've locked in so far, or any sort of results from their price decreases, or like what was the attach rate in Q1 or something like that. If there's demonstrable stats that all the MBAs out there can be like, oh, I could like attach the growth rate to my model, like and make the math work. That's when I think you could actually see the stock start to pop, because it's kind of easy to ignore FSD when Tesla doesn't disclose anything about it, which has been the entire history of FSD. But if they start disclosing, then you have to take it into account in your financial models. So I think to the extent that they start doing that, that could be a very nice catalyst for the stock potentially.
Okay, good. So in about 5 minutes at 1 o'clock Pacific time, a little bit afterwards, right? Don't we normally get the shareholder deck dropped? So we keep a look out on that, and we'll share that as soon as it comes. So a question for the panel: do you guys think that there might be any surprises? Is this going to be just a run of the mill, recorded, of course, everything scripted, and then they answer the questions? Is it just going to be something pretty standard of what they see, or could there be any kind of surprise at all? Yashu?
Yeah, thanks, Robert. I think, first of all, I'm very confused as to who Elon is going to be surrounded by, because there's no more Drew, there's no Zach, obviously, anymore. There's just a lot of questions around who's going to be directing. It's going to be Elon, so which means it's going to be totally unscripted, off the hip, and completely candid as possible, which might be, not the best story for Wall Street. But that aside, I think that to answer your question, I'm really excited about hearing about where the first robotaxi fleet might be operating. Elon tweeted the other day, Florida. Someone said Florida, and he said maybe, and that was the first time that I can recall that Elon specifically has called out some sort of state on the network post V12. So, V12 we know is a step change. I'm using V12 every day. It's kind of insane that I've gotten so used to just this car driving me around. People are so wowed about it. But I think today, what I'm looking for as a surprise would be way more details ahead of the 8.8 even, of where the first robotaxi fleet might operate, and Tesla's unit economics behind it and what they're looking at. Because I think even talking about that doesn't defeat the purpose of 8.8. 8.8 is going to be a much bigger story than just talking about their plans. So I'll sign off there. I wish you guys all best of luck for earnings. I'll be listening and tuning into everyone's chat, but I gotta hop off now. Take care, everyone.
Later, brother.
Although I was going to say that's
Peace.
very, very unlikely, right? They're not going to be talking about any details. But Nick, Elon actually replied to your post. You were saying about the regulations in Florida could be easier for robotaxi. Do you want to explain what you were saying there?
Yeah. So to be clear, he responded to a post of a reply to my post from God, I'm gonna butcher his name right now, out of Germany.
Alex Voigt.
Thank you. Yeah. And so he was essentially replying to my post where I was essentially just laying out what the regulations are in Florida for autonomous vehicles. And essentially Florida passed a law saying that the state will just essentially making it wide open. I don't want to go through everything, but also adding stipulations that cities, counties, municipalities, regulators at the smaller level outside the state can't put any kind of barriers around this. And that really the company just has to have proper insurance, proper liability, show, some evidence, and it's essentially wide open is what they're saying. And so I was just putting that out there to say, like, everyone keeps making a big deal about regulators, but there's a lot of states that have adopted this wireframe of a concept for legality of autonomous vehicles. And so, something I've been hypothesizing, Farzan and I were talking about the other day on a stream or on a video, I could easily see it where on A8 you have like Greg Abbott and Ron DeSantis, up there saying that we're going to open it up in parts of the states and, try this out. And you would never know this ahead of time with regulatory approval because it's just a lot less friction than what you see with Nevada, Arizona, or parts of California. Anyways, so Elon said maybe to that, which was interesting. He might be teasing. He does that a lot, but it is interesting to think about it, that this could be something. I mean, they've been saving all these leased vehicles for a reason, so you never know.
Wonderful. Okay. So we are keeping track of the investor relations page. They should at some point, right? Typically about 5 minutes, about now, we should be able to see the shareholder deck and we'll download it. We're gonna see the numbers. Anybody else want to answer the question? Is there any surprises that we might expect?
I'm just going to add, I think, Elon will be surrounded by Lars, who runs, vehicle program engineering. And there's two really able, strong VPs of supply chain at Tesla, Roshan Thomas and Karan Budaraj. And they were actually there on the last call when there was kind of when they kind of stepped in and started talking about, hey, look, we've got a bunch of different cost reduction ideas that we're going to pursue. So I would imagine that they would be there as well for any questioning. They're super strong.
I think from a surprise perspective, I think Tesla has a chance to surprise on energy because they have a record quarter, but I don't know if that's going to do anything material. So,
yeah, I was actually going to jump on that one too. I think Brian was talking about the amount of deferred revenue and the milestone payments essentially that are inherent in Megapacks. So you do have a bit of a lag between when all these Megapacks get deployed and then the different tranches for recognition of that revenue. So it was, the record quarter was only 2% higher than the previous record. So I don't think there's anything kind of massive in the deployments. But because the accounting is so kind of obscure for these and delayed, then I think we might get a bit of a surprise on Megapacks. But even if it was a huge surprise, it's not the sort of thing that's going to save, like 20 cents on earnings per share or something like that.
So Yasha was talking about, some sort of announcement that we might do Florida first. That's just not likely going to happen, right?
Looks like it just came out. Stock's reacting up a couple bucks, but it might not be on your F5 refresh. It might be just Dow Jones Newswire right now. Maybe another minute or so before you see it.
Okay.
And yeah, it's bouncing all over.
Herbert, I'll say as far as surprise, how about Elon's in a very optimistic mood and potentially we hear, well, that's all I got really. I had another one, I just can't remember it.
I have to bring it up every pre-earnings call. One of these calls, or maybe between calls, a partnership announcement. That could be a surprise. Or just progress towards it.
Yeah. I was going to say maybe teasing, we are in deeper conversation with someone, just a tease, not who or anything like that.
But he's done this many, many times. He makes forward-looking statements about, robots and we're the leaders and we're going to be the biggest company. Go ahead.
I was just saying it's 152. So
the stock jumped.
Oh, we're up 5%.
154. What's going on? We still don't see the release.
Well, just so you guys know, like Dow Jones Newswire, like the institutions get this over Bloomberg. They pay, $10,000 a month for the data service. They get it usually a few minutes before it even shows up on their website. So the institutions already got this a couple minutes ago.
I'm seeing 17.4. Somebody's messaging me 17.4% gross gap.
157 and climbing.
Ooh, it's out. I've got it.
It's out. I got it.
Exciting, guys.
This is exciting.
Can you guys see my screen?
Rare.
Nope. You're not showing the PDF.
Non-GAAP earnings per share of 45 cents. So that's pretty much in line.
Free cash flow negative 2.5 billion.
Anything in the guidance about like anything interesting? Outlook, I mean, usually at the bottom. That's where I go first. I'm gonna pull it up myself here.
Okay, let's look at the outlooks. Yeah.
You like want to read everything at the same time, but it's like, hey, you also want to go through it piece by piece.
Oh, we have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half of 2025. These new vehicles in the Outlook product section. These new vehicles include more affordable models will utilize aspects of the next generation platform as well as aspects of our current platform, and will be able to produce in the same manufacturing lines as our current lineup. This may result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more CapEx efficient manner during uncertain times. This would help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 50% growth over the 2023 production before investing in new manufacturing lines. Our purpose-built robotaxi will continue to pursue a revolutionary unboxed manufacturing strategy. So, this is a hybrid model.
This is new vehicles, more than 50% growth over 2023, and it's ahead of our previously communicated start of productions in the second half of 2025. That means it's going to start in the first half?
Yeah. I mean, that could be one takeaway. And it also looks like they're pulling elements out of between platforms and kind of making a hybrid version as a step towards the 25K car.
It sounds to me like they're going for a gigacasting equipped Highland Model 3 and potentially even an even more compact vehicle than that is not moved all the way to the unboxed model, which is where potentially the Reuters article that said, hey, we're canceling NV, whatever that number was they're moving, instead of waiting for the unboxed production process to be fully realized, they're going to go ahead and start delivering a compact vehicle ahead of that, which is kind of huge positive news.
There's a pretty big nugget actually on page 8. If you guys don't mind, I'll jump in their vehicle and other software. They say, we are currently working on ride-hailing functionality that will be available in the future. We believe the Tesla software experience is best in class across all our products and plan to seamlessly layer ride-hailing into the Tesla app. This is what ARK Invest has been asking for forever. It sounds like they're basically going down the path of doing ride-hailing first, and then launching that into robotaxis down the road. That's a pretty big deal in my mind.
Oh, so you could put your car on the network, and maybe you're driving it, obviously, because it's not a robotaxi, and you can do rides.
Yeah, and then Tesla's, figuring out some stuff with the back end and customer ratings and that sort of thing. And I think it also opens up another revenue stream. It's probably going to be very small to begin with, but I think this is really smart. I mean, this is exactly what Tasha Keeney from ARK Invest has been saying they should do for the last 3 or 4 years. And Elon's like, no, we just got to focus on solving autonomy. Well, now they're actually working on ride hailing, so that's pretty cool.
Also on page 8, you'll notice that we just hit the 1 billion miles of FSD milestone, a month ago. And on page 8, you can see it is well past 1.2, about 1.3 billion miles. That means in the last month, they've got 3 to 4 times more driving in data than Waymo has collected in their entire history. So it is, if they are not compute constrained, I wouldn't say they're data constrained. I would say this is the time when things are getting a little crazy.
Page 17 has a preview. Thank you, Brian. Sorry. As a preview of the ride-hailing app.
Wow. Okay. Let's take a look at this.
I thought this wasn't a product announcement.
I know.
I thought earnings calls weren't a product announcement.
Of course,
so
it's not.
You can summon 3 minutes away. What's
we're gonna have happy Elon? That's my takeaway.
What's 68 degrees?
So
What's
Matt,
that?
we need to get happy Elon ready and denying that this is a product announcement, even though it's a product announcement.
That's more Adrian Dittman's territory. He's much better at like happy-go-lucky Elon.
Yeah,
Somber
Matt,
Elon's my territory.
I'm a
Oh,
little
it's a-
disappointed that he exists now because he's kind of taken the crown of sounding like Elon. I really enjoyed yours.
Well, his is so much better. You gotta be. You
I
gotta
know, but
root for the
yours is
winners.
funnier. Your word choices were funnier.
We
Matt,
need
you
a
could
mashup.
impersonate Matt. You could impersonate Adrian Dittman, impersonating Elon, maybe.
Oh.
This is getting very meta.
Oh, pun intended. You can still do Zach.
Yeah, I do wish we still had Zach because he was actually my favorite because he was a bit of a nerd like me.
Easily your
And,
best one.
Yeah. It's just basically my own voice, so it's very easy.
Okay, so let's just take a look at the summary again. It looks like for the volume one, there's nothing new, right? It looks pretty straightforward. The same thing that they've said in the past. Now, in terms of
I don't know. Well, they say notably lower. Did he
that's
say?
what they said last time.
Oh, growth rate. Okay.
That was the same. Notably lower than the growth rate
Okay.
in 2024. Exact same words. We have
Yeah.
sufficient liquidity to fund our product roadmap. So nothing interesting there. That's the same. Cost over time, we expect our hardware-related profit to be accompanied by an acceleration of AI software. Did they mention anything about their compute powers? How much they've gained there?
Yeah. There's a chart on, I think it's page 7 or 8 where we just were. It's wild, the spike, and I think that's why you see the free cash flow so negative. In addition to the inventory drawdown, they bought a huge amount of
Whoa.
H100s. Look at that spike.
Whoa.
The bottom chart there.
Okay. Okay.
I mean, they basically doubled in the last quarter. It's bananas. Actually, more than that.
Yeah. The estimate that Brian Wang was saying is that, well, we're past the 100 exaflops. We're near the 400 exaflops at this point. And this basically says that that's the case. Look at that. Wow. So he's not lying when he said that we would be number 2 and number 3. Tesla would be number 2 next to Meta, and X would be number 3. And then, yeah, it's down here. Sorry, jumping around here. It says 4680 ramp continues to stay ahead of the Cybertruck ramp. But that's the only statement they made.
You can clearly see that they're really starting to pivot to the FSD AI angle starting with this quarter. I mean, this is one of the reports that has the most around that than any other one that I can remember. I mean, they had to do this almost.
Okay, Emmett, what's going on with the stock?
It's still around low 150s, between 150 and 155, kind of staying in that range.
Okay.
We'll see what the
Why
earnings
don't we-
call says.
Up
Does.
6%.
I'm curious to see
Yeah.
what happens if Elon leaks any nuggets of good news or info that the investors or traders like that pushes it up another few
Did we
percent.
get
We'll
negative
see.
earnings? Yeah.
No.
No, we didn't. No, we got 32 cents gap diluted and 45 cents adjusted, excluding stock-based comp. I think it's 45 cents.
Yeah, it's right here. 45.
You're right
cents.
on line.
So any surprises in terms of the financials?
So I've been taking a look. It doesn't look like it. Energy gross margins 25%. The automotive gross margins pretty much right in line with where we were expecting, at least the kind of, I don't know, Tesla Twitter consensus. All these numbers look pretty much exactly as I was expecting. So this is a case where I think everybody knew the bad news going into this, and so now there's a couple little nuggets of exciting stuff coming.
What's the operating margin? Right there. 5.5%. It's not bad. Okay. Some people were doom and gloom thinking it was going to be like.
What was the automotive gross margin? 17.4. Where's the automotive gross margin? 15.9. Where's that? Which one is that? I think that's a number people investors have sort of given up on at this point, though.
Well, like the
the
regulatory
ones-
credits are in line too. 442 million. There's nothing. This seems like a pretty high quality. There's not like a massive one-time item that's kind of spiking this.
I mean, I will tell you the gross margins on the vehicle. So
Yes.
it came in at 15.6%, excluding ZEV credits and the leases, and cost only went up about 1%. And I would have expected that. So that's with Cybertruck being at its worst spot in the ramp. So
That's not
I would
bad.
almost that's a little bit of a positive surprise for me, is that they're able to absorb the Cybertruck ramp a little bit better than I expected. Especially in a quarter where they delivered such much significantly lower numbers in their profitable models and 3 and Y, plus all the different inefficiencies they had in the quarter. So that bodes well for the rest of the year, as long as they can execute at a high level.
So I will say real quick that there are a lot of people who are going to say that they are surprised that Tesla is moving forward with a compact of sorts, even though it's before unboxed, because they read that Reuters report that the NV91 was canceled, and that means it's canceled. So the first thing I did when I saw that story is I got on the phone with my parts supplier sources and asked what they had seen, and they didn't have any information specific to it. But what they explained to me, and what I've been trying to say for weeks, is canceling a part number doesn't mean that the entire project is canceled, doesn't mean the entire philosophy is canceled. It can often mean you didn't get the contract, or that the contract just changed. And that's what we're seeing, is that we don't need new factories. We can build other cars in the factories we have. It is clear that they built too many lines for Model Y. There's 2 in Fremont. There's another 2 plus in Texas. They have spare capacity. The North American market cannot absorb that many Model Ys. So transferring one of them over, or even just replace an entire factory if you have to, take the Ys out of Fremont or Texas, switch to a different model, and just crank them out. Because if it's clear from the margin and the pricing on the Model 3 that they could make a slightly cheaper, slightly smaller version, and it would compete at retail cost against the Civic, against the Camry, rather than the Accord or the BMW. So there's again, Reuters is not, when they switched to a paywall, they gave up their soul, is what I'm saying.
Yeah. What I see here is that, this company is healthy and they're investing in the right places. So they spent $2.8 billion of capital expenditures, most of it on AI, right? That's where they're spending the money. And so they did the cost cutting exercise. They got rid of laid off 10% of the people. But look, it still says that they're still seeing, including reducing cost of goods per vehicle. So that's pretty good. So even though they did company-wide cost reductions, they're investing in the right places, is what I'm trying to say. And they still have $27 billion of cash.
But it is very interesting that it seems like the stock has responded to just the guidance they're giving on that new vehicle platform, or the next set of vehicles that are going to leverage the existing platform, which points to more car sales than they expected for the next, let's say, 12 months. Because that verbiage they have on page 10 of, we have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half of 2025, right? That implies that, unless I'm reading this wrong, that it's coming either in the first half of 2025 or in a crazy scenario, the second half of 2024, which I doubt. But it's weird that the stock reacted on car news, on volume news still. So I think it's going to be interesting to see still how Elon and the team try to frame the story, not around that, but around autonomy and FSD and the bot. It's going to be very curious to see how they do that, because clearly the market is still looking for cars. The market doesn't care about AI, and I don't think they will until it shows up on the P&L, to be completely honest.
Yeah, these paragraphs have quite a bit of incredible information. So not only did they say they're ahead of previously communicated start of production second half, right? They need these new vehicles, including the more affordable ones. That's everybody's waiting for that language. It's going to include this next generation platform, as well as aspects of our current platforms. It's going to be produced on the same manufacturing lines as the current vehicle lineup. So we'll need to dive into that a bit more. And then,
can I comment on this?
Yeah.
Yeah. So first off, they are Cybertruck continuing to reduce COGS, even in a lower volume unit environment in Q1. Production was at 430, shipments at 386. They were still taking COGS down. So this whole fantasy that some people were having of that they heard the CFO said that we're done with COGS reductions, or it's going to be like minimal. It looks like they've called it out multiple times in their report that in all the sites and all the products ex Cybertruck that they've meaningfully taken it down. These new vehicles basically provide a bridge to the next generation platform. And what they're doing is they are shifting. When you're doing cost reductions in a product line, you have like the normal quarter-on-quarter declines that you drive from your supply base and you drive out of your factories. Somebody's got the screws on Tom Zoo. It's like, look, we need greater efficiency. That's why you saw, it's one of the reasons they deprecated some capacity, both labor and probably capital, that we'll see flow through in the second half run rate, meaning, they're going to have lower overhead costs going in the second half of this year. But he's pressed every quarter to take his cost structure down in the gigafactories, and now they're doing this big event, which we'll probably start seeing the impact of in June. But then on the product side, you have a mixture of supplier inbound stuff, commodity inbound stuff, and then this big bucket called event-driven reductions. And it looks like they took the event-driven reductions, they put it on steroids and said, we're going to pull stuff from the next generation. We're going to try it in the current generation product. What that does is that actually de-risks the ramp of it. So when they actually go to turn on Robotaxi or go turn on the next generation platform at higher volume, they would have de-risked it in a 3Y form factor. So they're going to take the COGS evolution and they're actually going to accelerate it on the 3Y. It's going to come down. It's not going to come down to the levels of the 25K vehicle, but it's going to provide a bridge to the 25K vehicle. So the analyst community should be looking at this with great assurance. So like, okay, Tesla has a plan to get volume and cheaper vehicles in terms of cost to produce and probably price point on the shelf prior to the next generation platform. This should be received very well.
Can I ask maybe, Jeff, so are we also to expect, so how is this going to impact 3Y? And maybe I missed this while you were saying this. Is 3Y profitability also going to benefit because of this?
Yeah, this looks like this looks like they're taking the 3 and Y, and they're going to be swapping out elements of the bill of material to reduce the cost structure and bring some of the stuff from the next generation into the 3 and Y. So it should be transparent to consumers. They should be continuing to get a great value in terms of value per dollar, but Tesla's cost to produce will go down.
What I see here was they said that, instead of just doing unboxed model, which they'll do for the Robotaxi, they're going to take aspects of the unboxed model, apply to the existing lines. And what it says here is, right, it says this update may result in achieving less cost reduction than previously expected, but it enables us to prudently grow our vehicle volumes in a more CapEx efficient manner. So they're going to go and utilize the full 3 million vehicle maximum capacity of the existing lines.
So the summary I've got on this that I'm looking at is all of the bad news was news we expected. All of the bad news was stuff that is in line with what we were expecting to see. And there's more good news than we had anticipated. Like Farzad was saying, Wall Street is not going to recognize AI until the revenue is there. I'd interviewed Matt Smith, who's here with us today, maybe a year or two ago, asking when are they going to start counting Megapack? When will Wall Street recognize it? And his answer was when the revenue shows up. And it was either that quarter or the next quarter that some of the analysts started modeling it because the revenue was too big to ignore. The shorts are freaking out. They are absolutely free. They are losing their minds on social media right now because it's easy money. You just short Tesla right before earnings. It goes down and you collect cash. And here we are after hours, up $9 something. It's tough times, and I'm expecting to see upbeat Elon on the call
I
because
hope so.
that's what I'm expecting. I've been wrong a time or two, but I think it's, Larry Goldberg. It's a very, very good report. Can he make, there you go. That's a perfect comment. Good job for finding that one. There's a lot of comments coming in. So yeah.
Yeah, Herbert. Go ahead.
No, go ahead, Nick.
I was just gonna say, just a few like key takeaways for me. One, the fact that they're saying vehicles, like plural, like not one. There's gonna be several, or at least two vehicles that they're gonna be coming out with. I love the fact that they're not going straight to unbox model. This has been something that I haven't spoken publicly about, but I was somewhat fearful that doing a whole brand new line, whole new production process, everything out the get-go induces a lot of risk. I like that they're taking a step, right? It's like you've seen those like memes with like a ladder that has like 15 feet between each step versus having like 16 steps. It's a lot easier. You de-risk it. So that's how I kind of see this. And then slide 22. It is, I just love seeing this. It's very Sandy Monroe Live-esque, slide 21, where they're breaking everything down. That's a Cybertruck, and they're, just costing out every part. I just think that's brilliant. But
this one.
Those are, like if you zoom in, like it's clearly a Cybertruck, but just you can tell everything's got sticky notes on it. Everything's color coded. They're finding ways to take things out. But I imagine as far as these new vehicles, they're going to start to layer in obviously parts of the unbox, but I imagine a 48 volt architecture will be part of that, right? Testing things out, really de-risking for the robotaxi. And then as far as this ride hailing, I mean, how are you guys reading that? Are you reading that as in it'll be a Uber type competitor at first, or are you reading this as in this would be like an actual, maybe geofence, maybe not geofence, I don't know, but actual autonomous ride hailing app? Because clearly this is the precursor to what we're going to see 8.8.
I think what's the interesting piece is in the middle. It has a 68 degrees. That's clearly the interior climate, right?
Yes.
So I'm wondering, would you offer that option for the passenger when there's a driver driving? Is a driver going to just give up control, right? So that's maybe that's the clue that says, hey, this is we're going to launch as driverless, but how realistic is that in the next say 6 to 12 months? But again, they're not really giving a timeline. They're just saying, hey, this is what it's going to look like. And again, this is a shift, like in page, for example, 13, it's like, hey, look at all the things we're working on, including AI, so on and so forth. Sorry.
Yeah. It's a feature that you can't do today, right? Go ahead. There's a post.
Yeah. Right before we all hopped on, or actually when we were in the green room, whatever you want to call it, Elon posted replying to, I think, AI Driver about 12.4 and 12.5.
Mm-hmm. What do you say?
I don't have it up. I'm not as
12.4 is a major improvement, and 12.5 is a whole nother level, Nicholas.
Thank you.
I've seen that. So
I got a question.
The point here is that these are things that you can control using the app, and you can control the things in the car before it arrives to you. This is things you can't do with any other ride-hailing service today. This is just an example of one of the things you can do.
I got a question for you guys. I think the ride-hailing app is going to be fascinating. They'll talk about it more on August 8th and such. But how do you think they're going to get the word out to a critical mass where it can function? I think like you have all of us, in the Tesla Twitterverse, but we don't make up close to enough critical mass to actually utilize it, in broad areas yet. So how do you think they get the word out for people to download this app and use it?
Yeah, I think that's easy.
Well, do you mean for customers? Yeah, I think it's easy. I'm not worried about that part. In terms of getting drivers, that's of course easy. You could just push notifications to the cars. They've got all our email addresses. They've got all our phone numbers. They can text us. But in terms of getting the word out,
10 million people to download it on their phone and start using it?
Yeah, Well, the first way is we're all going to use it when we're out of town. I will no longer use Uber.
Yeah, but we're like a few tens of thousands of people, maybe.
Yeah, I guess that's true.
Yeah, but so all right. So in the last call it month and a half, I've been in San Fran, LA, Manhattan, Chicago. It's been impossible to get Ubers. It's been impossible to get Lyfts. I have to wait 15, 20 minutes. Even when I think it's about to show up, they cancel on me. I mean, just that alone, that friction point, people are just going to be like, well, let's download another potential because all we have is Uber and Lyft. So that's low-hanging fruit there. Obviously, they're advertising. They could easily put up, traditional commercials, social media. All of us, the network effect. I mean, it's going to be like, oh, we have to whatever. Oh, you want? There's a cool factor, especially if it's an autonomous car. I think there'll be a natural cool factor. Like, sure, Waymo exists here and there, but the thing is, it's not everywhere, so you don't get that kind of viral effect. If you had it in several cities and several states, I think that starts to spread, and it becomes very organic. I mean, the idea of Uber was crazy. You want me to get into a random person's car with a stranger? Airbnb.
It was a whole new concept then. Yeah, it was like a viral
Yeah.
thing that went viral. But I'm just wondering, like, I'm just being devil's advocate. How are they gonna get like tens of millions of people to download this app? I'm just trying to play this
Well,
out.
you can start with just billboards at the airport. Just buy billboards at airports. Will get
that's a good
you
idea,
somewhere.
I actually
Don't wait for an Uber or
heard
Lyft.
a very interesting proposition the other day. I can't remember which analyst that I was listening to that was talking about this, but they said that you could. It was in the BG2 conversation between Brad Gerstner and Bill Gurley. They were actually saying that Tesla's ride-hailing network could actually purchase traffic directly off of the Uber app. That they could go into a partnership with Uber, and going back to Nick's comment earlier, like if they have a lot of excess capacity or excess demand right now and not enough vehicles to serve those, like there's a pretty good argument to be made on both sides of the table for there to be some sort of partnership between Uber and Tesla to start growing this. And then, I would think that this would be an area that Uber would be interested in partnering with Tesla on the technology side as well. And they already do have a relationship, and it would be great to see that actually grow as Tesla moves more in this direction instead of viewing each other as just complete competitors and kind of fighting it out. Because, one of the things that has always concerned me is as Tesla moves into this next phase of becoming a software as a service company, if they vertically integrate too much and they capture too much profit, they really become a target in a number of ways. And so the more that they can bring other people in as fleet operators or as FSD licensors or, various different things, the more that they spread the revenue love around that's going to be generated off of this software, the less they become a target, the more they benefit from other people's lobbying dollars and all those things. And so, I think I would apply the exact same logic to something between them and Uber as well. Like I would prefer not to see Tesla try and put Uber out of business. I would rather them work together to just provide better products and services.
But if that's the case, why are they showcasing an app? I think that's them showcasing an app. I feel like goes on the face of that logic. Not that I disagree with the sort of premise, but I do think if they're going to showcase an app that says, "Look exactly how we're thinking about outlining this app," I think points to the fact that they will be Uber competitor. And if it is a ride, it's a ride-hailing app where there's no driver and it's driverless. The biggest variable that we're able to pull is costs. Is their cost advantage because you remove the largest percentage of cost, and immediately the ad becomes or the awareness becomes hail an Uber, but for 30% less, and then just blast the ad campaign on Instagram on some people's phones already. Download now, get your first ride free. I mean,
first ride free.
Yeah. It writes itself. It just writes itself.
Yeah,
as long as they do that, as long as they can execute
Uber is the most pragmatic, but it's not Elon's style to partner with Uber, in my opinion. I think he'll do some viral marketing things through Tesla. I think, like you said, for the first one or two rides free, it'll encourage a lot of young people to just download the app with their group of people. Oh, let's go home for free. Download the app. Do it.
Yeah, I think the only argument against that is the Uber network effect is something that Tesla cannot overcome. But I find that hard to believe when Tesla has a product that's vertically integrated, whose cost per mile might be more than 50% cheaper than
Yeah.
Uber. Like,
It
why
could be
wouldn't you
cheaper.
leverage that advantage? You know what I'm saying?
I hear what you're saying. I don't know. Like, I 100% expect Tesla to vertically integrate and have their own app while they are developing this platform, because, you know, if regardless of whether they are going to be the sole provider of the Tesla network or if they're going to do licensing or whatever, they are still going to go through a phase where they do have their own app and their own service. Even if the long-term goal is to have other people operating huge fleets of Teslas, like, you know that they're going to do an end-to-end service to make sure that they have the tight feedback loop that they want to develop not only the vehicles themselves and the software that does the driving, but also all of the other software, so they can have like a perfect API that other people can plug in. You know, if say if Ford wants to license FSD to also be able to participate in a robotaxi type network, well, they've got to have all of the stuff on the Tesla side already figured out and debugged and made easy so that someone else can come in and license it. And so, like, I hear what you're saying. What I'm saying is that we're going to see what we're seeing now, regardless of which fork in the road that Tesla's going to take, you know, 5 or 10 steps from now. And so it's hard for me to, you know, say with certainty which one of those directions they're going to go. But then I'll come back to saying my preference is for them to partner with more people over the long term rather than trying to make all of the money themselves.
And just before Nick goes, Uber is down 2% in after hours.
So all right. So let me go back to Emmett's original question. I was just thinking about this. Another way they could get 10 million people to adopt this quickly with the Cybertruck. Clearly, they've done something with celebrities to really get the voice out there. If you get a Kim Kardashian getting into an autonomous Tesla instead of an Uber, like that's over. Like, there's your 10 million right there out the gate. But the reason I don't like the idea, like, I love the PG Squared podcast. I love it. It's great. But they are talking their book, as they even admit on the podcast. They are big investors in Uber. What I don't like about that idea, if you extrapolate, okay, API calls ability to reach the Tesla app, if you will, but now you're in a Ford app, now you're in a Hertz app, now you're in a Uber app. It's annoying. It's like the IoT of homes now, where it's like everything has its own app, and eventually you had these aggregators that took all those IoT devices and made one. You don't want to have 15 apps for ride hailing on your phone, right? If I go to a Hertz and I want to just get a Tesla, I want to be able to just get a Tesla and use my Tesla app. I want to have one source of truth rather than this disparate mess. So just, from a user experience, I would hate that. But I get your point. Like, I do like the idea of being able to quickly, siphon off from, oh, Uber has too much demand. Hey, we can siphon off some of that traffic for you so you don't look so bad, Uber.
Well, it's
I actually agree with this.
The king of
slow.
Oh, sorry, Herbert.
I was going to say, Slower Cooper said this: having a separate app doesn't mean they cannot partner. You will have your own app, you will have your own offering, and then you will partner with others. I don't know if you already said this, Hans, but that Brad Gerstner, Bill Gurley, and they are Uber investors. They understand ride hailing very well. And what they said is that you will, like McDonald's has their own app, but then you can order using Order Eats because they know that they can only service kind of the average usage. When it goes peaks, they need support. And so maybe Uber might also offer Tesla, and you can order through them too. Doesn't mean that Tesla can't have their own app.
Yeah, do you think it'll be through the X app, or it'll be on the Tesla app, or both? I mean,
it looks like it's a Tesla app.
Yeah,
but that's interesting. I think it'll be powered by X, right?
Yeah, integrated somehow, maybe.
Yeah.
Well, they could both work with each other's back ends, basically, and siphon over Uber data to Tesla, and then vice versa. The king of everything in COGS is utilization. And if you could get your utilization flattened out, so you're not planning your cost structure around peaks, you're planning it more around a nominal situation, and you can do that, they can both help each other a lot. There is there's data from Uber that could help Tesla, and from a utilization perspective, they could both help each other. I'm not saying it has to happen, nor do we have to get fixated on it. I'm just saying that there's aspects to it, and the utilization piece is probably one of the bigger ones. There's also, you can throw supercharging in the deal. You can throw a number of different things in the deal that kind of sweeten it up for either side, and now you've got this big trusted network of people to onboard to the Tesla, the Tesla robotaxi experience. So, I mean, this could be a whole show. This could be a whole other conversation. I think, Herbert, we talked a little bit about it on Monday, but there's utilization is the kingpin of all this from a COGS perspective.
Yeah, it makes most sense that it's going to be on the Tesla app. You're using Tesla app now to order to know supercharger. How much things charge. You would use a Tesla app to actually control the climate, right? So that's what makes most sense. What do you guys think about this table here? The ecosystem, right? So they've got solar energy, lithium refining, auto bidder. Then you've got charging, battery cells, AI compute, humanoid robots, FSD supervised, vehicles, service collision, love it. Vehicles is like one thing out of the whole thing. Then they've got insurance, and then they got ride hail. I don't know. That sounds to me that the vehicle, the ride hail, and then there's insurance, this little ecosystem here. It's all going to be part of the same thing. Yeah. When you order when you have autonomy in your car, it'll be bundled with insurance. And what if you buy a vehicle today or a vehicle in the future, and the cost of the insurance is the same as the cost of the autonomy? $100 a month.
Can we talk about this car that's coming sooner than we thought? Or do we think it's the cheaper car, or do we think it's the van? Or do we think it's something else?
Cheap compact is my guess. It's got to be something affordable, so that there's now segmentation between that compact model and the 3 and the Y to allow those prices to go back up while production is constrained. There are a lot of people who just want into the Tesla world who just can't afford 40, 50, 80,000 for whatever. And with that 3 ludicrous coming out, the 3 performance, I'm curious to see what that's going to do to some of the Plaid and Model S sales for people who just want something quick. But I think it's affordability is the key. I think they've got all the pieces they need before Unboxed to make something that is more affordable than what we've got now.
Well, I mean, are you referring to this line here that says we've updated our future vehicle lineup? The launch of new models, not just one.
Right. Yeah. So accelerate the launch of new models ahead of our previously communicated start of production in the second half of 2025, right? So I'm guessing an unveil for these, either one or many models, should happen in the next couple quarters, right? Unless they are launching this more affordable car, which I don't know if there's any benefit of announcing this up front and just turn it on in the configurator area, as we talked about before. But I'm curious, now that they're leveraging the existing line, and they kind of indicated in this document that they may not see the cost savings that they will with the unbox process. Does that still imply $25,000 vehicle? Is this now a $30,000 vehicle? Is this we're going to make Model 3 a little bit more expensive, and then maybe offer a $32,000 hybrid Model 3, Model Y, hatchback, smaller version? Like, you know what I'm saying? Like, it's interesting, because if they're not going fully unboxed, that I think by default means that the form factor of the car is going to be more similar to what they have now than what they would have with the unbox process, unless I'm thinking about this incorrectly. I'm trying to figure out, like, what's the price point of this thing now? If it really is a compact car, cheaper car that's coming sooner than late 2025, what is this exactly? Like, and I don't know if there's any thoughts there, but that's kind of where I'm wrapping my head.
I mean, it says here, right? These new vehicles, including more affordable models.
Right, but I'm trying to figure out, like, what's the number? What's the number though?
Well, in China, they're probably around, somewhere around 29K in 3Y COGS. In the US, they're probably closer to 34 or something in that area. So just stick on China for a minute. If you extrapolate this and say the 25K car needs to target COGS, not at launch, it won't get there at launch, but terminal COGS at between $17,000 and $18,000 all in, and then you draw a straight line between this and that, you're maybe you get COGS closer to 25K, 24, 25K. And that to me de-risk, just from like having a background in product and supply chain, to me, like in reality, that's a much more realistic plan than saying I'm going to jump from 30 some $1,000s in COGS down to 17. I'm going to do it in one leap. This to me seems like a much more reasonable slope to get there.
Yeah, here's my answer. I think it's going to be, and I was teasing this in the last couple of weeks. Why can't they create a Model 3, a new version of the Model 3, a trim that is much cheaper? Why not create a new Model Y, and do those two, launch that sooner before you actually have the unboxed model, which is now going to be robo-taxi. Let's take the unboxed model that we've learned, apply it to the Model 3, Model Y, reduce the cost a little bit more, use the same production line, create a, why couldn't you, we were just talking about how the Model Y can be $35,000 now with the $2,000 reduction. And you can even bring that even further with additional reductions if you add the unboxed model to it. And then what happens if you have the Model 3 and create a brand new trim, just completely bare bones, use the same, it's the same outer shell, the same car, and sell that for under $25,000. And then use the unboxed model for the robo-taxi. That's what they're going to do.
Yeah, they can use their unboxed model for a number of vehicle types. It doesn't just have to be a robo-taxi. Sorry.
Right.
Well, I agree.
I was going to say, especially if you...
I think the unboxed model will be used if you're going to go all in on robotaxi, you're going to use the unboxed model now for many vehicle types, but they're all going to be autonomous.
Yes. But yeah, to go to Jeff's point earlier, like you're going to do that new trim. Like right now, they're not, any of the Model 3s and Model Ys that are coming out are not going to be built with the new 48 volt architecture or with steer by wire. But this new version of, I would expect that we will see a new Model 3, potentially even a new Model Y, that, like you said, it's the same on the outside, but it is new on the inside. It's using a lot of the same componentry that they're trying to ramp up for the next generation vehicle platform that is lower cost. And so, yeah, I would definitely expect to see steer by wire and 48 volt architecture come to those new iterations of those products. And that's why obviously you'll still be able to produce those new 3s and Ys on the existing lines once you retool them for, those different architectures.
Let me ask this question then. The whole argument about this debate between the Tesla executives and Elon wanted to accelerate the robotaxi, and they said no. Isn't this outcome the best possible outcome we could have asked for? Right? Which is, let's go ahead and still maintain these, drivable cars, use the Model 3, Model Y, lower their costs, and then continue to build the autonomous cars also. He didn't completely drop. This is not the language that you would have read if he said, we're no longer going to build drivable cars anymore.
Yeah, it's almost like Tesla has exceptional management, and that has not ceased to be the case magically over the last 12 months, even though Elon's been tweeting a bunch.
No, Elon is both the best and worst thing that could ever happen to Tesla at the same time. And everybody agrees, okay? Listen. Okay. So, but here's my question now. If Gen 3 Unboxed is designed to be 50% less cost and let's say twice as efficient in the same footprint, which should be able to sell multiple units, millions of units per year from with the first couple lines when they're fully ramped, and this new cheaper car, whatever the price point is now in a sort of hybrid existing line plus unboxed line. Okay. Does that mean that this car is capped at, say, 3 to 4 million units per year? You know, like what's the volume going to look like between where Tesla's going and where Tesla is at right now with cars that can drive? So like what this leads me to believe, and I could be wrong here, what this leads me to believe is that they're going to be selling a lot more autonomous only cars than non-autonomous cars.
They say it, as far as that, they said right here, right? It's just maximum capacity of close to 3 million vehicles. So they're going to maximize that to existing production lines to hit the 3 million vehicles.
Well, that's what they no. So I think what they're saying there is that they're built around 3 million vehicles now, and they're going to leverage that to build a cheaper car. That's the way I'm reading that. You know what I'm saying? So this would help us fully utilize our current expected maximum capacity right now, current expected maximum capacity of close to 3 million vehicles, not including this cheaper vehicle.
No.
Right?
I'm reading it the other way, that the 3 million is what they can do if they are also making something more affordable that for which there's still strong market demand.
But by default, that means they're going to have to build a lot more lines, because this cheaper car is going to sell way more than the 3 and the Y, which is going to blow out the 3 million.
They've got a lot of lines.
It's a cheaper model. It's a cheaper Model 3 and it's a cheaper Model Y. That's what this is.
I don't see it that way. I'm in between you guys. I think it is a new model and I think it is cheaper, but they can retool a line for less than the cost of building a line. We saw it in Fremont when they decided we need one more line. So they grabbed a bunch of scrap equipment that they weren't using because they bought too many robots thinking they could over automate, and just added a line in a tent. It's a sprung structure, Marie.
Matt, you're a savage. Farzad, the way I look at that is same line, yet incorporate aspects of the unbox process means higher volume out of same line, right? So we could probably move faster without having to have additional lines. And then you could always put in additional lines. I also think that we're not going to see it in the States. I think this will be just a China market and a Europe market kind of thing out the
Agreed.
gate. Not to change the subject here, but one, we're almost up 10% in after hours.
You're the only one that called it right. Everybody's saying that in the comments.
You know, signal, guys, signal. But so something that I feel like we really glossed over is in the pictures that they had at the end of the deck, they have DOJO training cluster quote or parentheses not a render. I think this is potentially them signaling that, you know, the DOJO project is not failing as many thought, or as big of a quote unquote gamble as Elon alluded to. This is a big deal. They're not highlighting this for no reason. So
this is the kind of analysis we're getting from Nick, guys. We didn't hear that from anybody else here. Nick, brilliant.
Yeah, I had noticed a picture, guys. Follow me.
Well, I was about to say this, and this is really dumb, but watch this, guys. This is so stupid, okay? I'll laugh at myself. Is this an Easter egg? This is supercharger network, but could these cars, why did they pick the Rivian? Why did they pick, what is this, by the way, Ford? What is this?
That's the
EV
Hummer.
That's the Hummer.
That's the Hummer.
Is this a possibility that these are the partners?
There.
Could this be the partners for Robotaxi?
No.
I know it's dumb. It's dumb. Well, I'm looking for Easter eggs.
I'm glad you realized it, Herbert.
But I like you're looking. It's good to just float out some crazy ideas, because one of them might happen. We'll see. It could be Ford and Rivian. It's possible. Or GM is the Hummer, right? Yeah.
Yeah. GM.
Okay, that's impossible. So,
GMC.
Yeah, that's not possible.
that's not
That's a
possible.
big deal. That's 1 of 7.
I noticed they put the gig in Nevada picture in, like, we're starting construction. So that's a good sign.
On the semi, yeah.
That's some fine quality dirt right there.
Yeah. Should we start the say questions? We've got 30 minutes. No, wait. Yeah, we have 30 minutes, right?
36 minutes.
Yeah.
Yeah.
What do you guys want to do next?
That'll take a while. We never finished them, so yeah, let's start it.
Oh, we also need to get the Matt Smith Elon. Well, what kind of Elons are going to be?
Oh, isn't that what we did last time? Matt would
We
answer
got
the
it.
questions.
Yeah. Okay, why don't we do that? Do you want to do this, Matt? You ready?
I haven't even looked at the questions, let
Well,
alone done the Elon
That's
voice
even
in like
better.
3
Do
months.
you think
All right,
Elon
great.
looks at them? Come on.
Fair point.
Well, here we go. So I'll be Martin Vecca, right? So thank you everybody for joining the annual share or the first quarter Tesla earnings call. We've got some questions here from the retail investors. Let's go through them now. First question here is, what is the current status of Optimus? Are they currently performing any factory tasks? And when do you expect to start mass production? Elon?
Yeah, I don't think we want to make any product-specific announcements around Optimus quite at this time. This really isn't the right venue. What I will say is the progress is astounding. People just do not appreciate the profundity of the step change in economic output that will be enabled by the combination of a humanoid robot plus extremely capable artificial intelligence. So it is capable of doing useful tasks, and I guess we'll be sharing some more details in a better format.
No, he's gonna be saying something bigger than that.
Orders of magnitude bigger, I would argue.
What anybody else think?
Well, I'm going to say no to the factory tasks because the factory is too fast-paced, and just the wranglers for it would be potentially problematic in a high-speed environment. Maybe they're bringing it in on Sundays to get its feet wet, but I just don't see it being happening yet. And I think this is too forward-looking to get an answer today.
We have been training it to work on some jujitsu moves, so that whenever Zuckerberg is ready for the task, Optimus will take him out. So that is the primary use case that we're developing at this time.
Much better, Matt. Good job. Thank you.
I do love that this is
Anytime,
the first
any place.
question. Do you guys think that this should be the first question? I'm so happy that this is the first question. I think it's probably the most important product or segment that Tesla has, and they should be starting with this beyond anything else. Am I wrong?
I love it.
I mean, I'm glad it's on there. I don't know if it's the most important one because the answer is an obvious no.
So who thinks it's just going to be a no? Just like it's going to be what Matt did, which is punt it to the future. I think it'll be somewhere in between. He's got to promote. He's got to talk about Optimus. He's not going to share a lot of extra details, but there will be a nugget or two that we haven't heard yet. Is what I'm gonna go with.
I think he'll show up as he's talking about FSD, but I don't know if it's going to be the central focus. I think autonomy and FSD and this sort of cheaper car on the existing line is going to be the focus by far. It's going to be like 80% of the call.
I think for
In my
long-term
opinion.
investors, though, it's probably the most important, Herbert. You're right. And I think long-term investors want to hear him talk about it and share any new nuggets of info, maybe. But I think for the near term or for the first things first is autonomy and FSD, like Farzad was saying, obviously.
If that's the case, a lot of the questions were about autonomy, but not the first two. The second question is about 4680. How did this get in here? Why did this get in here? What's your opinion, guys?
Well, I mean, it's disappointing, of course. We'd like it to be 10 times what it is, 20 times what it is, and maybe we'll get there. But we've seen that they're getting some new equipment in. The ramp has been very, very challenging. Tesla is not a battery company yet. They hadn't been before this. So it's entering a new industry is difficult. So they're going to have to take what lessons they were able to learn from Panasonic in Nevada and apply them. And it's proving quite challenging. Other companies have looked at 4680 as well. And a lot of them have scaled back their ambitions because there's something bedeviling about the form factor that's holding everyone back, and I don't know what it is, and the people I talk to who do know what it is won't tell me because they're employees who who don't dare. So I think we know it's keeping ahead of Cybertruck ramp. That's all we can ask for, and I think that's all we're going to hear.
I mean, I agree 4680 is huge for the company. I'm just saying, is it the second question?
I think it's a waste of a question, personally.
Yeah. Elon asked this third question is, what is Tesla's current assessment of the pathway towards regulatory approval for unsupervised FSD, full self-driving? This is unsupervised in the US. And how should we think about the appropriate safety threshold compared to human drivers? Is that a good question?
I'll be the negative one here. Go ahead, Elon. How dare I?
Yeah, I thought I fired you already. Sorry about that. Yeah, I think people think that the regulations are somehow more complicated than actually solving autonomy. This is extremely hard. Having a vision-based, generalized approach to solving driving is one of the single hardest problems that mankind has faced, and we are now at the precipice of solving this. It will become extremely obvious that it is reckless and dangerous to not enable autonomy. And so any regulators who want to stop that because of some petty political ideas will be killing people. That is just a fact. So yeah, is it a challenge? Is there some uncertainty? Yes, but ultimately we think the data is on our side, and there will be forward-looking regulators who see the data and who see the benefits and don't want to kill the population and those who vote for them, and so they will approve them, and that is the way that it will work. Now, in the US, things are more legal by default, and in the EU, they're more illegal by default. So we will have some challenges, but at the end of the day, if you don't want to kill people, then you will allow robotaxis.
Exactly.
I love how you transition from Zach to Elon in the first few seconds there.
I haven't practiced this thing.
No, I won't lie. I think some of these questions are a waste. Like, that's a question that you can just look up online. What are the regulatory hurdles? And Elon has spoken about this many times. Like, it's not a new question. Like, I don't know why we keep asking the same questions over and over.
I do think that he might answer this last question. How should we think about the appropriate safety threshold? He has said before that he thinks that he thinks that in the hardware 3, it should be 3 times safer, 3 to 4 times safer than a human. Hardware 4 could be 5 times safer. I think he might come out and say now that we are at 5 times safer than a human at this point.
He said that in a post like 3 days ago. Like,
what did he say?
He literally said that we are 5x safer or whatever. With that, I mean, it was literally a post that just happened a couple days ago.
But I think, I don't know. I think this question is super relevant to what they just disclosed, though, right? Because now in this quarter, they're really going hard in trying to frame the story. I mean, you can see it from the earnings report. They're trying to frame the story around autonomy, around AI, around these sort of next gen things that they're working on. And so since it's relevant, I think it's time for the company almost to give a little bit of like, because before they've been vague about sort of like, once we reach 6 billion miles, or, it's all based on regulatory approval, what you just went through. But now we're at the point where they're showing the app on the deck. So it would be super helpful to know, okay, who are you talking to? Like, are you talking to somebody about this regulatory approval? What are the signals you're getting from these agencies, right? How do we think about your path of that? Are you still on track for 6 billion miles to be enough, right? I think these are super legitimate questions because the story has been in the back burner for the better part of 5 years since Autonomy Day. And now that it's actually becoming real, I think revisiting this is honestly going to help the company set the tenor for the rest of the year, especially from a stock perspective, for those that follow it. And
I'm actually surprised, Nick, that you're the one that said this, because he might come out and say exactly what you said, right? Which is, he goes, the question is pathway towards regulatory approval. He might say which is, many districts will be difficult, but there's going to be some that will come on right away. He might not name it. He might not say Florida, maybe, but he might say that there will be. We already have several ideas of which districts will start with.
But that's my problem with the question. What you guys are saying, I 100% agree with. That question is layered in ambiguity and is so far zoomed out that Elon will just gloss over it. If you said pointedly, is there a state, a county, a city that you guys are currently working, not asking to name names, but that you're working with to deploy this? A yes or no, right? Like, can you narrow it down for Elon?
Okay, great question. This should have been number 1 or 2, right? Have any of the legacy automakers contacted Tesla about possibly licensing FSD in the future? Every single quarter, he has answered it, even if it wasn't asked of him. The last time he wasn't that good, right? That wasn't that encouraging when he said that we really encouraged them to call me, but it didn't sound like that they were happy now. Jeff, did you want to jump in? This might be something that you've been thinking that might happen, right?
Sorry, Herbert, go ahead.
Yeah, legacy automakers contacting Tesla about licensing.
Yeah, I mean, I think every day we're just a day closer to this. It's to me, it's proportional to the performance of V12 and the lack of performance and cog structure for autonomy from other competitive offerings. So the more days that they advance without the cost structure or without the performance that a Tesla V12 solution will give you, the closer we are to a partnership. So yeah, it may start with, hey, we're in discussions, and then eventually it will be, there's a Twitter, there's an X space that's being, scheduled the day of to announce, a conversation or to announce something, just like they did with the supercharger. So, but this is a pretty big deal. This is a much bigger deal than supercharging. But I think they've actually set that up nicely with their supercharging agreements and their other agreements with other partners. So, hopefully there's progress. There's progress that they can speak to.
So who in his panel is expecting a partnership announcement this year?
I am.
Why not?
Sometime this year? Sure. Why? I mean, the year is still very, very new.
1, 2, 3, 4, 5. Emmett and Matt. What do you guys say? Nope. Emmett says no.
I want to hear from Emmett.
Yeah, I don't think this year.
I don't think so.
Yeah, I want to hear from Emmett, not Matt. Definitely from Emmett.
I was going to say, anytime Emmett says something, it comes true.
Emmett, don't say it then. We don't want to hear from him then.
No, well, I'm saying, like, I remember when we were like at 1.2 trillion. He's like, hey, it could easily go down to 600 billion. And I was like, no way. Boom, it happens. And then recently, Emmett had a more optimistic look. I'm like, Emmett, signal.
That's just a stock.
I'll take it.
I think I think that the licensing thing, it's possible there's some kind of announcement like maybe Rivian or something. I'm wondering Rivian needs anything they can to get this story right for them. But I think it's more likely the legacy automakers maybe in discussions behind the scenes, but that could take a while and they want to wait to see it work on Tesla before they would officially license it. That's my thought.
So I like this comment. Announcing it this year, but actioning in 2027.
Exactly. And that's the thing is, if you look at Toyota, they announced a partnership with Huawei to use their driverless system. And I don't think it's because they believe Huawei will be first. I think it's because it's a cheap and easy way to punt. They can just say, look, we're not working on it. We're not spending that money. We're not investing. We've got it under control. We're taking this seriously. We've got a partnership, a memorandum of understanding signed so that we don't have to actually work on it. And then they can move forward without spending any time, effort, or money being serious about it, just like they're not serious about EVs. And I think it would be I wouldn't be surprised if somebody like Suzuki came along and said, yeah, we're going to just, what you said, whatever you've got, that's what we'll start using once it's level 4, level 5, then we'll integrate it. And that something like that would be free for them to do, and it would free up resources, and it would answer a lot of questions.
Yeah, Herbert, So this is the type of question I really like because it's very honed in, right? It doesn't give you a lot of outs to deviate from the topic. So I think that's really good. But I was just, maybe this is the wine kicking in, but I was just kind of thinking, how ironic is it that we've had so many quarters in the past where the numbers were actually good, right? I mean, really over the last 2.5 years, so many where the numbers were good, but man, did the stock take a dump and it was just a bad, everything just felt bad. And yet here we are, arguably the worst quarter that we've had in 2.5 years, and everything feels so optimistic. Like just the juxtaposition of that, it's, I guess I'm just saying that to take in the moment, enjoy this right now before the call even starts, enjoy this good feeling.
Do people agree with him that it's optimistic? Are you guys feeling better?
I'd say it's about managing expectations, and my expectations were very, very low. So I think the expectations were managed well. It's like when you get a new Jason Statham movie and critics give it good marks. It's not because it's a good movie. It's because they knew what to expect.
Oh, love it. It's up by $11 after hours, 155.
That tells you everything you need to know right there. But not just that, but they're talking about new vehicles coming out ahead of schedule. They're showing the app. They're talking about starting a actual network. We've been waiting for this information, and the culmination of all that is starting to happen. I mean, forget the numbers. Like, just look at the thesis and what we've been talking about. And again, it's kind of giving a big middle finger to Reuters at the same time.
But it is interesting how this move, at least so far, is very much a sentiment move. This is not a number move. This is a sentiment move. This is you're telling us it's going to happen this way. It hasn't been solidified in the numbers, right? And I think the one thing that the story could benefit from is that now that there's this sort of, the one overarching thing that I've been hearing since Elon and Tesla had that layoff is like, oh, daddy's back. Daddy's back. Elon's back, but that paired with this could be something quite positive for the stock, because now you're saying, hey, check it out. We actually have a leg of growth coming sooner than you thought. We're developing these new technologies that are going to have SaaS-like margins, and it's coming faster than you think, and daddy's home, right? The perception, right? This is how the market works, I feel like. The market is created by humans. Humans are emotional, and so by default, the market's emotional, right? So stuff like this is going to play. So it's going to be curious to see how long they can keep that up for, if it's going to continue impacting the stock long term, and then can they lay the numbers down in the P&L in the next 12 to 24 months?
Why was it then that question wasn't even in the top 10? I think the question about Elon, how are you feeling about the annual shareholder meeting? Are they not allowed to talk about it? But why wasn't even asked, in the top 10 questions?
There's no rules about what you can and can't ask. There's just more consideration about what you're going to answer. And some of the, it feels like there's a lot of people who are invested who have a fair amount of money and not a whole lot of understanding of how they got that money or what money does or what business is. So it's pretty discouraging.
They do look at questions, and they do knock it out if it's not what they want. I've had a couple of questions.
Okay, number 5. Can we get an official announcement and timeline of the 25,000 vehicle? Unbelievable. It's obviously a great question. Came out number 5. Do you guys think that the shareholder deck actually answered this yet, or do you think that this is a much more specific question?
I mean, isn't the Model 3 almost already at $25,000? I mean, they get the COGS down. Maybe they switch. It feels like it's kind of like becoming redundant, the $25,000 vehicle to me. I mean, when I had that report come out, like they're going to deprioritize the 25,000 and focus on the robotaxi, that made sense to me, because I feel like the Model 3, they're lowering it. They're continuously lowering it. I don't see why that can't become the 20 with the rebates and stuff. I mean, it just seems almost like people have been so focused on this for so long, but we're like almost already there with the Model 3. It's kind of weird.
Well, the Model 3, I mean, the rebates are mostly a U.S. thing, and then the Model 3 COGS are probably well above 25K. So, yeah, there's definitely room for a product that's between $17,000 to $18,000 COGS, which looks like end state, and today the $29,000 to $32,000 COGS between 3 and Y. it looks like there's room for another product, and it looks like they can pull that forward. They can not only de-risk, their portfolio, but they can de-risk the jump to the next product portfolio by getting some of those components into scale and worked out faster, and work through those issues faster. So then the robotaxi really focuses more on the unboxed manufacturing method and any new components needed for those, and then maybe they can de-risk 3 and Y. By the way, this gives more life to 3 and Y, so then you can do further capital depreciation on a lot of current capex that they have. So that's a big win from a lifetime COGS perspective. So there's a lot of goodness in this approach. Other companies have done this as well, but this is I think this is a really good move for Tesla.
Next question. Robotaxi. So following the Tesla's robotaxi unveil on 8/8, what is the realistic timeline for launching a revenue-generating robotaxi network? Will they wait until 8/8 to answer that question, or do you think that they might hint on that now?
If I were
Either way, I think
Tesla,
it's an excellent question.
Yeah, if I were Tesla, I would say, look, you're going to see this in slices and waves, and yeah, maybe there is an answer to the question. Maybe there's a year you start with, like, in this year we think the app, the vehicle, the autonomy piece all align. But between now and then, we're gonna be releasing. We're not gonna wait for, the enemy of perfection. Is good enough. We're gonna wait. We're gonna start releasing this in stages, basically. So I think you're gonna see that. The interesting thing we haven't spent enough time on is from today until this point in time. Like, we created some future excitement here, but one question analyst could, like, what is Q2 going to look like? What's Q3 going to look like? What's Q4 going to look like? What's Q1 of 2025 going to look like? So, there's definite risk here of some of this conversation going sideways. What does notably lower mean? In terms of, this year, what does that mean? Tell us that. So there's definite risk of this, going sideways as well. I think we're all excited about what Tesla is doing. I think these are great moves. But it all depends on what everyone's, time horizon is. There's certainly plenty to pick at as well.
I think that's an excellent point, because, very easily the framing around the moving up the cheaper vehicle and leveraging the existing line could be macro looks bad and looks recessionary, and so we have to prioritize a cheaper model, because otherwise, like, that is the forcing function. It's not so much like, hey, we want to do this because we think we can. It's like, hey, we have to do this, because if we don't have to, we're going negative cash flow and negative profits, right? So that I think that's an excellent point by Jeff, and something to look out for.
Well, also, what's the deal with Giga Mexico? Like, why isn't that broken ground? I mean, I have my own theories about it, but that's a huge. We're coming up on a year. It's
a great point.
My guess on that is they are incessantly focused on improving efficiency of their existing lines and output. That's why in the deck you saw each site contributed COGS. When a site is contributing COGS reductions, that's on the process time, test time, the whole full process time of manufacturing the vehicle from end to end. And then there's the whole inbound piece in terms of supply chain. So my guess is, as they're doing that, the process times are coming down, and they can get more vehicle output per square meter. The other thing is they can also do additions and phases onto the existing sites that they have. So I don't know. There's probably room for. They just deprecated some capacity, I guess, in Austin, and then they got they're separating a couple thousand people. So it sounds like there's room to add back and again between this and the robotaxi phase. So it's a question though. It's just like, well, when do you see that happening? But it's not. My point is, I think they have some option value to play with in their existing sites and existing lines. They said 3 million vehicle capacity, by the way, near 3 million unit vehicle capacity with this approach that they're doing. Didn't mention Mexico.
Yep. So we have in 10 minutes, we're going to go ahead and play on this on all of our channels. We're going to live stream the actual conference call. So we've got a few more minutes here to review. I do like this comment. This person said, we aren't excited enough about the robotaxi software preview on page 17. We absolutely are. But when you saw that, when they actually showed you that they actually have already created the app, that tells you that on 8.8, this isn't just going to be, here's what the robotaxi will look like. It's going to be, here's the program. And so for them asking the question, what's the realistic timeline? I think they're going to wait till 8.8 to express that, except he'll say, right, that we are well on our way to creating a full robotaxi program. Progress on Cybertruck ramp. What is the progress on the ramp up?
Should pull out the rivet gun and talk through how many rivets
30 seconds
last week.
Yeah. And anything that they could add color to this? I mean, I think they're going to say that it's going really well, right? Things are moving faster. Things are slow at the beginning, but it will accelerate in the end.
Yeah, I was just walking the line earlier this afternoon, and the line only is ever going to go as fast as the slowest part of the entire process. So the team's just making incredible progress right now. We finally got some of the pieces of equipment that we needed, so that's going to help to really automate some of the slower pieces. But I mean, we've gone through this S curve of the ramp many times. It brings a whole new set of challenges with Cybertruck because the metal is so terrible. Terrible. I just read a terrible accent. Somebody was making fun of me. I lost it. Yeah, I'll end it there.
Arthur's just laughing his head off at you. At you, not with you.
At me. Yeah.
Before the earnings call, maybe we should give a quick recap of what we know from the numbers that are out.
Numbers bad, narrative good.
I mean, they came in around expectation. We've got, what was it, 38 and 43 cents GAAP and non-GAAP earnings. We've got negative free cash flow for the first time in quite a while, but because they bought so much AI compute, a substantial increase in the number of H100 equivalent processing power, and then not too many surprises, really.
I'm just going to test this out. If I play this, can you guys hear this? Oh, great. I'm slow.
It's wrong, but it
Yes.
feels.
Yes. Yeah, I hear.
Shake a leg. The brainstorm's kicking.
Shake a leg. Shake a leg. All right.
Not sponsored. Bye.
Here, while we're talking about the H100 equivalents, I did want to, they pulled a little bit of a switcheroo on us here, and now we're calling it H100 equivalents. When the last time they shared us this this chart, it was in A100 GPUs, and I think there's roughly a 3-to-1. It's like 3.17 if you use the FP16 rating of the A100s and then compare that to the FP16 rating of the H100s. It's pretty close, and it looks like they have actually now caught up. So if we come over here to this chart, we're just under 38,000 is what it looks like, roughly H100 equivalents. We take that and come back to where we should be in April on this chart, somewhere around 120, 130, maybe 140,000 H100 equivalents. And yeah, if you multiply that 3.17 number by the 38,000, we're basically right now in line with this chart that Tesla had planned. And that's really good news, because you can see by how steep this this part of the ramp is here that we were quite behind, and whatever cluster they just turned on, whether that's DOJO, whether that's a bunch more H100s, maybe it's a combination of both, that they were able to catch up to where they were planning to be at this point in time. So that's great news. This also tells us when Elon said, hey, we are no longer compute constrained, that is a very recent phenomenon based on how steep this little curve is. And so that should tell us now that as we move forward into the newer versions of FSD, well beyond the releases that we're getting today are at least 3 months old, potentially as old as 6 months old. And so we should see faster progress later in the year. And I'm hoping that we, potentially even get some more commentary on that from management today.
Yeah. And Hans, to that point, can we go back to that chart real quick? Sorry.
That was
I know
groovy.
we're about to start. So to your point, like when we saw the acceleration in December, right? We talked about this in DMs, that 15 to 25, that's clearly the NVIDIA. That 25 to 35, that's something else. And them showing that DOJO infographic or picture makes me think that they're ramping up DOJO. And I think maybe this is me with tinfoil hat. I think last earnings call they're downplaying DOJO intentionally. And as we know, XAI got their own set of NVIDIA H100s. Yeah, and so I think the reason that went to XAI is because DOJO, which is purpose-built for what FSD is, kind of came online. So I don't want to speak too much here out of turn, but I think this is clearly DOJO progress, and that's really what I want to highlight.
Yeah, this is definitely speculation, but based on the low amount of, they said $1 billion in AI CapEx. That's not very many H100s. So for them to be able to more than double what they had already in a single quarter with under $1 billion worth of CapEx, that leads me to think that you're probably close to correct there, Nick, and that this is probably, a much heavier mix at the very least of DOJO.
Well, you got to look at the CapEx from the prior quarter as well in terms of
they spent $2 billion.
Procurement.
I don't know how that works, Jeff, but I know the way that they probably capitalize it's not all in one lump sum, right?
Yeah.
This is probably out over, either
They're definitely
done,
capitalizing the stuff. Yeah, right.
Yeah, it's either over 3 or 5 years, or they did it based on progress of it being up and running. That's the way it normally for hardware. Normally, the way they do it in the server world.
Yeah, and Nvidia's up after hours pretty decently. So
yeah.
And Uber is down.
Tesla's up by $11.90 after hours. Any expectations what might happen while Elon's talking?
We'll know in the first 30 seconds.
What about Emmett? Emmett, you got a feeling about this?
I think stock drifts higher. I think he's positive. I think he might let out some interesting nuggets of information, and I wouldn't be surprised if based on where the behavior of the stock is going now, it continues and drifts to 170. I would not be surprised. My 50-50 over under is like 162. That's my 50-50 over under.
Are you expecting, or do you expect that Elon, because of the upcoming annual shareholder meeting, that he'll?
I think that helps. Yeah, I think that can't be denied. I don't know if explicitly he's going to be conscious of it or make a conscious decision like I have to be. But it's just a factor in the situation. He's under the gun for a very important shareholder vote that determines the future of Tesla and his relevance to it.
Herbert, I'm going to be
Starting
taking
one.
live notes on the earnings call. I'm going to share my screen up to you if you want to share it or not. I do this for
Of course. Please.
everything. So seems like people appreciate them.
Are you granting access, Farzad?
Yeah, everybody should be able to click on the link. I pinned it to my comments section, and I'll post it here in private chat as well. Feel free to share.
Yeah, you're an amazing scribe, by the way.
It says you need
World of
access.
Warcraft, baby. A lot of PC gaming.
What
you
kind
need
of?
access. Hold on.
Yeah, my spelling would be atrocious.
Sorry. Okay, you should be able to access now.
This is just in case they started exactly on time.
Good.
Yeah. Herbert, just turn the volume down.
Yeah, put it in the background. Then once they come in, you can crank it all the way up.
Yeah, it's like it's good.
Come on,
background
Mr.
music.
Producer, get your
All
game
right.
up. My
Okay.
God.
All right.
Herbert, don't listen to him. You're doing a fabulous job.
lot
As
of
always.
backseat
No,
driving
Herbert,
there.
thank you so much. You're doing a great job, seriously. Everybody, round of applause for Herbert in the chat. All the chats. Good job, Herbert.
Thanks,
Thank you very
guys.
much.
What a 180, Farzad.
It's live. Yeah, because he's not mad.
And I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q1 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events and results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Martin. So to recap, in Q1, we navigated several unforeseen challenges as well as the ramp of the updated Model 3 in Fremont. There was, as people have seen, the EV adoption rate globally is under pressure, and a lot of other auto manufacturers are pulling back on EVs and pursuing plug-in hybrids instead. We believe this is not the right strategy, and electric vehicles will ultimately dominate the market. Despite these challenges, the Tesla team did a great job executing in a tough environment, and energy storage deployments, the Megapack in particular, reached an all-time high in Q1, leading to record profitability for the energy business. And that looks likely to continue to increase in the quarters and years ahead. It will increase. We actually know that it will. Significantly faster than the car business, as we expected. We also continue to expand our AI training capacity in Q1, more than doubling our training compute sequentially. In terms of the new product roadmap, there's been a lot of talk about our upcoming vehicle line in the past several weeks. We've updated our future vehicle lineup to accelerate the launch of new models ahead of previously mentioned start of production in the second half of 2025. So we expect it to be more like the early 2025, if not late this year. These new vehicles, including more affordable models, will use aspects of the next generation platform, as well as aspects of our current platforms, and will be able to be produced on the same manufacturing lines as our current vehicle lineup. So it's not contingent on any new factory or massive new production line. It'll be made on our current production lines much more efficiently. And we think this should allow us to get to over 3 million vehicles of capacity when realized to the full extent. Regarding FSD version 12, which is the pure AI-based self-driving, people if you haven't experienced this, I strongly urge you to try it out. It's profound, and the rate of improvement is rapid. So we've now turned that on for all cars with the cameras and inference computer and everything from hardware 3 on in North America. So it's been pushed out to, I think, around 1.8 million vehicles, and we're seeing about half of people use it so far, and that percentage is increasing with each passing week. So we now have over 300 billion miles that have been driven with FSD V12. Since the launch of full self-driving, supervised full self-driving, it's become very clear that the vision-based approach with end-to-end neural networks is the right solution for scalable autonomy. And it's really how humans drive. Our entire road network is designed for biological neural nets and eyes. So naturally, cameras and digital neural nets are the solution to our current road system. To make it more accessible, we've reduced the subscription price to $99 a month, so it's easy to try out. And as we've announced, we'll be showcasing our purpose-built robotaxi or cybercab in August. Regarding AI compute, over the past few months, we've been actively working on expanding Tesla's core AI infrastructure. For a while there, we were training constrained in our progress. We are, at this point, no longer training constrained, and so we're making rapid progress. We've installed and commissioned, meaning they're actually working, 35,000 H100 computers or GPUs. GPU is the wrong word. They need a new word. I always feel like a wince when I say GPU because it's not GPU, G stands for graphics and doesn't do graphics. But anyway, roughly 35,000 H100s are active, and we expect that to be probably 85,000 or thereabouts by the end of this year. In training, just for training. We are making sure that we're being as efficient as possible in our training. It's not just about the number of H100s, but how efficiently they're used. So in conclusion, we're super excited about our autonomy roadmap. I think it should be obvious to anyone who's driving version 12 in a Tesla that is only a matter of time before we exceed the reliability of humans, and not much time at that. And we're really headed for an electric vehicle, an autonomous future. And I'll go back to something I said several years ago, that in the future, gasoline cars that are not autonomous will be like riding a horse and using a flip phone. And that will become very obvious in hindsight. We continue to make the necessary investments that will drive growth and profits for Tesla in the future. And I wanted to thank the Tesla team for incredible execution during this period and look forward to everything that we have planned ahead. Thanks.
Thank you very much. And Vaibhav has some comments as well.
Thanks. It's important to acknowledge what Elon said. From our auto business perspective, we did see a decline in revenues quarter over quarter, and those were primarily because of seasonality, uncertain macroeconomic environment, and the other reasons which Elon had mentioned earlier. Auto margins declined from 18.9 to 18.5%, excluding the impact of Cybertruck. The impact of pricing actions was largely offset by reductions in per unit cost and the recognition of revenue from auto park feature for certain vehicles in the US that previously did not have that functionality. Additionally, while we did experience higher costs due to the ramp of Model 3 in Fremont and disruptions in Berlin, these costs were largely offset by cost reduction initiatives. In fact, if we exclude Cybertruck and Fremont Model 3 ramp costs, the revenue from auto margins improved slightly. Currently, normalized Model Y cost per vehicle in Austin and Berlin are already very close to that of Fremont. Our ability to reduce costs without sacrificing on quality was due to the amazing efforts of the team in executing Tesla's relentless pursuit of efficiency across the business. We've also witnessed that as other OEMs are pulling back on their investments in EV, there is increasing appetite for credits, and that means a steady stream of revenue for us. Obviously, seeing others pull back from EV is not the future we want. We would prefer it the whole industry went all in. On the demand front, we have undertaken a variety of initiatives, including lowering the price of both the purchase and subscription options for FSD, launching extremely attractive leasing specials for the Model 3 in the US for $299 a month, and offering attractive financing options in certain markets. We believe that our awareness activities paired with attractive financing will go a long way in expanding our reach and driving demand for our products. Our energy business continues to make meaningful progress with margins reaching a record of 24.6%. We expect the energy storage deployments for 2024 to grow at least 75% higher from 2023. And accordingly, this business will begin contributing significantly to our overall profitability. Note that there is a bit of lumpiness in our storage deployments due to a variety of factors that are outside of our control, so deployments may fluctuate quarter over quarter. On the operating expense front, we saw a sequential increase from our AI initiatives, continued investment in future projects, marketing, and other activities. We had negative free cash flow of $2.5 billion in the first quarter. The primary driver of this was an increase in inventory from a mismatch between builds and deliveries, as discussed before, and our elevated spend on CapEx across various initiatives, including AI compute. We expect the inventory build to reverse in the second quarter and free cash flow to return to positive again. As we prepare the company for the next phase of growth, we had to make the hard but necessary decision to reduce our headcount by over 10%. The savings generated are expected to be well in excess of $1 billion on an annual run rate basis. We are also getting hyper-focused on CapEx efficiency and utilizing our installed capacity in a more efficient manner. The savings from these initiatives, including our cost reductions, will help improve our overall profitability and ultimately enable us to increase the scale of our investments in AI. In conclusion, the future is extremely bright, and the journey to get there, while challenging, will be extremely rewarding. Once again, I would like to thank the whole Tesla team for delivering great results, and we can open it up to Q&A.
Thank you. Okay, let's start with investor Q&A. The first question is, what is the status of 4680? What is the current output? Lars?
Sure. 4680 production increased about 18-20% from Q4, reaching greater than 1K a week for Cybertruck, which is about 7 gigawatt hours per year, as we posted on X. We expect to stay ahead of the Cybertruck ramp with the cell production throughout Q2 as we ramp the 3rd of 4 lines in phase 1, while maintaining multiple weeks of cell inventory to make sure we're ahead of the ramp. Because we're ramping, COGS continues to drop rapidly week over week, driven by yield improvements throughout the lines and production volume increases. So our goal, and we expect to do this, is to beat supplier costs of nickel-based cells by the end of the year.
Thank you. The second question is on Optimus. So what is the current status of Optimus? Are they currently performing any factory tasks? When do you expect to start mass production?
We are able to do simple factory tasks, or at least I should say factory tasks in the lab. In terms of actually, we do think we will have Optimus in limited production in the factory, in the actual factory itself, doing useful tasks before the end of this year. And then I think we may be able to sell it externally by the end of next year. These are just guesses. As I've said before, I think Optimus will be more valuable than everything else combined. Because if you've got a sentient humanoid robot that is able to navigate reality and do tasks at request, there is no meaningful limit to the size of the economy. So that's what's going to happen. And I think Tesla is best positioned of any humanoid robot maker to be able to reach volume production with efficient inference on the robot itself. This perhaps is a point that is worth emphasizing. Tesla's AI inference efficiency is vastly better than any other company. No, there's no company even close to the inference efficiency of Tesla. We've had to do that because we were constrained by the inference hardware in the car. We didn't have a choice. But that will pay dividends in many ways.
Thank you. The third question is, what is Tesla's current assessment of the pathway towards regulatory approval for unsupervised FSD in the US? And how should we think about the appropriate safety threshold compared to human drivers?
Sure, I can start. There are a handful of states that already have adopted autonomous vehicle laws. These states are paving the way for operations, while the data for such operations guides a broader adoption of driverless vehicles. I think Ashok can talk a little bit about our safety methodology, but we expect that these states and the work ongoing, as well as the data that we're providing, will pave the way for a broad-based regulatory approval in the US at least, and then other countries as well.
Yeah. It's actually been pretty helpful that other autonomous car companies have been cutting a path through the regulatory jungle. That's actually quite helpful. And they have obviously been operating in San Francisco for a while. I think they got approval for the city of LA. So these approvals are happening rapidly. I think if you've got at scale a statistically significant amount of data that shows conclusively that the autonomous car has, let's say, half the accident rate of a human-driven car, I think that's difficult to ignore, because at that point, stopping autonomy means killing people. So I actually do not think that there will be significant regulatory barriers, provided there is conclusive data that the autonomous car is safer than a human-driven car. And in my view, this will be much like elevators. Like, elevators used to be operated by a guy with a relay switch, but sometimes that guy would get tired or drunk or just make a mistake and shear somebody in half between floors. So now we just get in an elevator and press a button. We don't think about it. In fact, it's kind of weird if somebody's standing there with a relay switch. That'll be how cars work. You just summon a car using your phone. You get in, it takes you to a destination, you get out.
You don't even think about it.
You don't even think about it. Just like an elevator. It takes you to your floor. That's it. Don't think about how the elevator is working or anything like that. Something I should clarify is that Tesla will be operating the fleet. So you can think of like how Tesla, think of Tesla like, I don't know, some combination of Airbnb and Uber, meaning that, there'll be some number of cars that Tesla owns itself and operates in the fleet. There'll be some number of cars, and then there'll be a bunch of cars where they're owned by the end user, but that end user can add or subtract their car to the fleet whenever they want. And they can decide if they want to only let the car be used by friends and family, or only by 5-star users, or by anyone. And at any time, they could have the car come back to them and be exclusively theirs, like an Airbnb. You could rent out your guest room or not anytime you want. As our fleet grows, we have 7 million cars, 9 million cars, eventually tens of millions of cars worldwide. With a constant feedback loop, every time something goes wrong, that gets added to the training data, and you get this training flywheel happening in the same way that Google search has the sort of flywheel. It's very difficult to compete with Google because people are constantly doing searches and clicking, and Google's getting that feedback loop. It's the same with Tesla, but at a scale that is maybe difficult to comprehend, but ultimately be tens of millions. I think there's also some potential here for an AWS element down the road, where if we've got very powerful inference, because we've got a hardware 3 in the cars now, but now all cars are being made with hardware 4. Hardware 5 is pretty much designed and should be in cars hopefully towards the end of next year. and there's a potential to have to run when the car is not moving to actually run distributed inference. So kind of like AWS, but distributed inference. Like it takes a lot of computers to train an AI model, but many orders of magnitude less compute to run it. So if you can imagine future paths where there's a fleet of 100 million Teslas, and on average they've got like maybe a kilowatt of inference compute, that's 100 gigawatts of inference compute distributed all around the world. It's pretty hard to put together 100 gigawatts of AI compute. And even in an autonomous future where the car is perhaps used, instead of being used 10 hours a week, is used 50 hours a week, that still leaves over 100 hours a week where the car inference computer could be doing something else. And it seems like it would be a waste not to use it.
Actually, do you want to chime in on tier process and safety?
Yeah, we have like multiple tiers of validating the safety. For like in any given week, we train hundreds of neural networks that can produce different trajectories for how to drive the car. We replay them through the millions of clips that we have already collected from our users and our own QA. Those are like critical events, like someone jumping out in front, or like other critical events that we have gathered a database over many, many years. And we replay through all of them to make sure that we are net improving safety. And on top of it, we have simulation systems that also try to recreate this and test this in closed loop fashion. Once all of this is validated, we give it to our own QA drivers. We have hundreds of them in different cities, in San Francisco, Los Angeles, Austin, New York, a lot of different locations. They are also driving this and collecting real world miles. And we have an estimate of what are the critical events. Are they a net improvement compared to the previous week's builds? And once we have confidence that the build is a net improvement, then we start shipping to early users, like 2,000 employees initially, that they would like get the build. They would give feedback on like if it's an improvement, or are they noticing some new issues that we did not capture in our own QA process. And only after all of this is validated, then we go to external customers. And even when we go external, we have like live dashboards of monitoring every critical event that's happening in the fleet, sorted by the criticality of it. So we are having a constant pulse on the build's quality and the safety improvement along the way. And then any failures, like Elon alluded to, you get the data back, add it to the training, and that improves the model in the next cycle. So we have this like constant feedback loop of issues, fixes, evaluations, and then it rinse and repeat. And especially with the new V12 architecture, all of this is automatically improving without requiring much engineering interventions, in the sense that engineers don't have to be creative in like how they code the algorithms. It's mostly learning on its own based on data. So you see that, okay, we failed here, or like this is how a person shows, this is how you drive this intersection or something like that. We get the data back, we add it to the neural network, and it learns from that training data automatically, instead of some engineers saying that, oh, here you must rotate the steering wheel by this much or something like that. There's no hard if-else conditions. It's everything is neural network. It's very soft. It's probabilistic. So it will adapt its probability distribution based on the new data that it's getting.
Yeah, and we do have some insight into how good the things will be in, like, let's say 3 or 4 months, because we have advanced models that are far more capable than what is in the car, but have some issues with them that we need to fix. So there'll be a step change improvement in the capabilities of the car, but it'll have some quirks that are that need to be addressed in order to release it. As Ashok was saying, we have to be very careful in what we release to the fleet, or to customers in general. So like if we look at, say, 12.4 and 12.5, which are really could arguably even be version 13 and version 14, because it's pretty close to a total retrain of the neural nets in each case, or substantially different. So we have good insight into where the models, how well the car will perform in, say, 3 or 4 months.
Yeah. In terms of like scaling laws, people in the AI community generally talk about model scaling laws, where they increase the model size a lot, and then they have corresponding gains in performance. But we have also figured out scaling laws in other axes. In addition to the model size scaling, We can also have data scaling. You can increase the amount of data you use to train the neural network, and that also gives similar gains. And you can also scale up by training compute. You can train it for much longer and get or like on more GPUs or more DOJO nodes, and that also gives better performance. And you can also have architecture scaling where you come up with better architectures that for the same amount of compute produce better results. So a combination of model size scaling, data scaling, training compute scaling, and the architecture scaling, we can basically like, okay, if we continue scaling based on these this ratio, we can sort of like predict future performance. Obviously, it takes time to do the experiments because it takes few weeks to train. It takes few weeks to collect tens of millions of video clips and process all of them. But you can estimate what's going to be the future progress based on the trends that we have seen in the past, and they've generally held true based on the past data.
Okay, thank you very much. Let's go to the next question, which is, can we get an official announcement of the timeline for the $25,000 vehicle?
I think Elon mentioned it in the opening remarks, but as you mentioned, we're updating our future vehicle lineup to accelerate the launch of our low-cost vehicles in a more CapEx efficient way. That's our mission, to get the most affordable cars to customers as fast as possible. These new vehicles we built on our existing lines and open capacity, and that's a major shift, to utilize all our capacity with marginal CapEx before we go spend high CapEx to do anything.
Yeah, we'll talk about this more on August 8th. But really the way to think of Tesla is almost entirely in terms of solving autonomy and being able to turn on that autonomy for a gigantic fleet. And I think it might be the biggest asset value appreciation in history when that day happens, when you can do unsupervised full self-driving.
5 million cars.
Yeah.
Well, a little less.
Well,
Some of those have yeah.
It'll be 7 million cars, in a year or so. And then 10 million, and then eventually we're talking about tens of millions of cars. Not eventually, it's like before the end of this decade. Yeah, before the end of the decade, it's several tens of millions of cars, I think.
Thank you. The next question is, what is the progress of Cybertruck ramp?
I can take that one too. Cybertruck hit 1K a week just a couple weeks ago. This happened in the first 4 to 5 months since we SOP'd late last year. Of course, volume production is what matters. That's what drives costs, and so our costs are dropping. But the ramp still faces like a lot of challenges with so many new technologies, some supplier limitations, et cetera, and we'll continue to ramp this year, just focusing on cost efficiency and quality.
Okay, thank you. The next question, have any of the legacy automakers contacted Tesla about possibly licensing FSD in the future?
We're in conversations with one major automaker regarding licensing FSD.
Thank you. The next question is about the robotaxi unveil. Elon already talked about that, so we'll have to wait till August. The following question is about the next generation vehicle. We already talked about that. So let's go to the Semi. What is the timeline for scaling Semi? I think
sure. So we're finalizing the engineering of the Semi to enable like a super cost-effective high volume production with our learnings from our fleet and pilot, our pilot fleet and Pepsi's fleet, which we're expanding this year marginally. In parallel, as we showed in the shareholders deck, we have started construction on the factory in Reno. Our first vehicles are planned for late 2025 with external customers starting in 2026.
Okay, couple more questions. So our favorite, can we make FSD transfer permanent until FSD is fully delivered with level 5 autonomy?
No.
Okay, next question. What is gating the production ramp at Lathrop? Where do you see the Megapack run rate at the end of the year? Mike?
Yeah, Lathrop is ramping as planned. We have our second GA line allowing us to increase our exit rate from 20 gigawatt hours per year to, at the start of this year, to 40 gigawatt hours per year by the end of the year. That line is commissioned. There's really nothing limiting the ramp. It's given the longer sales cycles for these large projects, we typically have order visibility 12 to 24 months prior to ship date. So we're able to plan the build plan several quarters in advance. So this allows us to ramp the factory to align with the business and order growth. Lastly, we'd like to thank our customers globally for their trust in Tesla as a partner for these incredible projects.
Okay, thank you very much. Let's go to analyst questions. The first question comes from Tony Sacconaghi from Bernstein. Tony, please go ahead and unmute.
Thank you for taking the question. I was just wondering if you could elaborate a little bit more on kind of the new vehicles that you talked about today. Are these like tweaks on existing models, given that they're going to be running on the same lines, or are these like new models? And how should we think about them, in the context of like the Model 3 Highland update? What will these models be like relative to that? And given the quick time frame, Model 3 Highland has required a lot of work and a lot of retooling. Maybe you can help put that all in context. Thank you. And I have a follow-up, please.
I think we've said all we will on that front. So what's your follow-up?
It's a more personal one for you, Elon, which is that you're leading many important companies right now. Maybe you can just talk about where your heart is at in terms of your interests, and do you expect to lessen your involvement with Tesla at any point over the next 3 years?
Well, Tesla constitutes the majority of my work time, and I work pretty much every day of the week. It's rare for me to take a Sunday afternoon off. So I'm gonna make sure Tesla is very prosperous, and it is. I think it is prosperous, and it will be very much so in the future.
Okay, thank you. Let's go to Adam Jonas from Morgan Stanley. Adam, please go ahead and unmute.
Okay, great. Hey, Elon. So you and your team on volume expect a 2024 growth rate notably lower than that achieved in 2023. But what's your team's degree of confidence on growth above 0%? Or in other words, does that statement leave room for potentially lower sales year on year?
No, I think we'll have higher sales this year than last year.
Okay. My follow-up, Elon, on future product. If you had nailed execution, assuming that you nail execution on your next gen cheaper vehicles, more aggressive gigacastings, I don't want to say one piece, but getting closer to one piece, structural pack, unboxed, 300-mile range, $25,000 price point, putting aside robotaxi, those features unique to you, how long would it take your best Chinese competitors to copy a cheaper and better vehicle that you could offer a couple of years from now? How long would it take your best Chinese competitors to copy that? Thanks.
I mean, I don't know what our competitors could do, except we've done relatively better than they have. If you look at the drop in our competitors in China's sales versus our drop in sales, our drop was less than theirs. So we're doing well. But I think Kathy Wood said it best. Like, really, we should be thought of as an AI or robotics company. If you value Tesla as just like an auto company, you would just have to fundamentally. It's just the wrong framework, and it will come to. If you ask the wrong question, then the right answer is impossible. So. I mean, if somebody doesn't believe Tesla's going to solve autonomy, I think they should not be an investor in the company. Like that is, but we will, and we are. And then you have a car that goes from 10 hours of use a week, like an hour and a half a day, to probably 50, but it costs the same.
I think that's the key thing to remember, right? Especially if you look at FSD supervised. If you didn't believe in autonomy, they should give you a preview that this is coming. It's actually getting better day by day.
Yeah, if you've not tried the FSD 12.3 And like I said, 12.4 is going to be significantly better, and 12.5 even better than that. And we have visibility into those things. Then you really don't understand what's going on. It's not possible.
Yeah, and that's why we can't just look at just as a car company, because a car company would just have a car. But here we have more than a car company because the cars can be autonomous. And like I said, it's happening.
Yeah, this is all in addition to Tesla working. The overall AI community is just like improving rapidly. Yeah.
Yeah, I mean, we're putting the actual auto in automobile. So, so sort of a lot of it, we go like, well, sort of like, tell us about future horse carriages you're making. I'm like, well, actually, it doesn't need a horse. That's the whole point. And that's really the whole point.
Okay, thank you. The next question comes from Alex Potter from Piper Sandler. Alex, please go ahead and unmute.
Great, thanks. So couldn't agree more. The thesis hinges completely on AI, the future of AI, full self-driving, neural net training, all of these things. In that context, Elon, you've spoken about your desire to obtain 25% voting control of the company. And I understand completely why that would be. So I'm not necessarily asking about that. I'm asking if you've come up with any mechanism by which you can ensure that you'll obtain that level of voting control, because if not, then the core part of the thesis could potentially be at risk. So any additional commentary you might have on that topic?
Well, I think no matter what, Tesla, even if I got kidnapped by aliens tomorrow, Tesla will solve autonomy, maybe a little slower, but it would solve autonomy for vehicles at least. I don't know if it would win on with respect to Optimus or with respect to future products, but it would. But there's enough momentum for Tesla to solve autonomy, even if I disappeared for vehicles. Now, there's a whole range of things we can do in the future beyond that. I'd be more reticent with respect to Optimus. If we have a super sentient humanoid robot that can follow you indoors and that you can't escape, we're talking Terminator level risk, then I'd be uncomfortable with, if there's not some meaningful level of influence over how that is deployed. If there's shareholders have an opportunity to ratify or re-ratify the sort of competition, I guess I can't say that. Whatever, but that is a fact. They have an opportunity.
Okay. Very good.
And we'll see if the company generates a lot of positive cash flow, we could obviously buy back shares.
All right, that's actually all very helpful context. Thank you. Maybe one final question, then I'll pass it on. OpEx reductions. Thank you for quantifying the impact there. I'd be interested also in potentially more qualitative discussion of what the implications are for these headcount reductions. What are the types of activities that you're presumably sacrificing as a result of parting ways with these folks? Thanks very much.
So, like we said, we've done these headcount reductions across the board. And, as companies grow over time, there are certain redundancies, there's some duplication of efforts which happens in certain areas. So you need to go back and look at where all these pockets are, get rid of it. So we're basically going through that exercise wherein we're like, hey, how do we set this company right for the next phase of growth? And the way to think about it is, any tree which grows, it needs pruning. This is the pruning exercise which we went through. And at the end of it, we'll be much stronger and much more resilient to deal with the future, because the future is really bright. Like I said in my opening remarks, we just have to get through this period and get there.
Yeah, we're not giving up anything that it's significant that I'm aware of. So we've had a long period of prosperity from 2019 to now, And so if a company sort of organizationally is 5% wrong per year, that accumulates to 25-30% of inefficiency. We've made some corrections along the way, but it is time to reorganize the company for the next phase of growth. And you really need to reorganize it, just like a human. When we start off as one cell and become a zygote and blastocyst, and you start growing arms and legs, and briefly you have a tail. And so.
But you shed the tail.
You shed the tail, hopefully, and then you're a baby, and you basically you have to be different. The organism, a company is kind of like a creature growing, and if you don't reorganize it for different phases of growth, it will fail. You can't have the same organizational structure if you're 10 cells versus 100 versus a million versus a billion versus a trillion. Where humans are like around 35 trillion cells. It doesn't feel like it feels like feel like one person, but you're basically a walking cell colony of roughly 35 trillion, depending on your body mass, and about 3 times that number in bacteria. So anyway, you've got to reorganize the company for a new phase of growth, or it will fail to achieve that growth.
Thank you. Let's go to Mark Delaney from Goldman Sachs. Mark, please go ahead and unmute.
Yes, good afternoon. Thanks very much for taking the question. The company had previously characterized potential FSD licensing discussions as in the early phase, and some OEMs had not really been believing in it. Can you elaborate on how much the licensing business opportunity you mentioned today has progressed? And is there anything Tesla needs to achieve with the technology in terms of product milestones in order to be successful at reaching a licensing agreement, in your view?
Well, I think it just needs to be obvious that our approach is the right approach. And I think it is. I think we're now with 12.3. If you just have the car drive you around, it is obvious that our solution, with a relatively low cost inference computer and standard cameras, can achieve self-driving. No LiDARs, no radars, no ultrasonics, nothing. Just
no heavy integration work for vehicle manufacturers.
Yeah, it's so it really just be a case of having them use the same cameras and inference computer and licensing our software. And but it's once it becomes obvious that if you don't have this in a car, nobody wants your car. Yeah, it's a smart car. I still remember back when Nokia was king of the hill. Yeah,
the cell phone
industry. Yeah, crushing. And I saw them come out with a smartphone that was basically a brick with limited functionality. And then the iPhone and Android. But people still did not understand that all the phones are going to be that way. There's not going to be any flip phones. There'll be a niche product.
Or home phones.
Yeah, not even exactly. When was the last time you saw a home phone?
Is it like an anachronism? I have no idea.
Yeah.
In a hotel. Sometimes in a hotel.
Yeah, the hotels have them. Yeah. So the people don't understand, all cars will need to be smart cars, or you will not sell the car. Will not. Nobody will buy it. Once that becomes obvious, I think licensing becomes not optional.
Becomes a method of survival.
Yeah, so it's license it, or nobody will buy your car.
I mean, one other thing which I'll add is, in the conversations which we've had with some of these OEMs, I just want to also point out that they take a lot of time in their product life cycle.
Yeah.
They're talking about years before they will, put it in their product. We might have a licensing deal earlier than that, but it takes a while. So this is where the big difference between us and them is, right?
Yeah, I mean, really, a deal signed now would result in it being in a car in probably 3 years.
Mm-hmm. That would be early.
Yeah, that's like lightning, basically. So
that's being an eager OEM.
Yeah. So, I mean, I wouldn't be surprised if we do sign a deal. I think we're good chance we do sign a deal this year, maybe more than one. But yeah, it would be probably 3 years before it's integrated with a car, even though all you need is cameras and our inference computer. So it's like not a massive design change.
Yeah, and again, just to clarify, it's not the work which we have to do, it's the work which they have to do, which will take the time.
Right, Mark, do
Very
you have a follow-up?
Yeah, very helpful. Thank you. My follow-up was to better understand Tesla's approach to pricing going forward. Previously, the company had said that the price reductions were driving incremental demand. With how affordable the cars have become, especially for vehicles that have access to IRA credits and some of the leasing offers that Tesla has in place, do you still see meaningful incremental price reductions as making sense from here for the existing products? And can the company meaningfully lower prices from here and also stay free cash flow positive on an annual basis with the current product set? Thanks.
Yeah, I think we can be free cash flow positive meaningfully. Yeah.
I think Vaibhav said it in his opening remarks, like our cost down efforts, we basically were offsetting the price cuts.
That's what I was going to say.
Goal. Like we're trying to give it back to the customers.
Yeah, I mean, at the end of the day, like for any given company, if you sell a great product at a great price, if you have a great product at a great price, the sales will be excellent. That's true of any arena. So over time, we do need to keep making sure that that it's a great product at a great price, and moreover, that price is accessible to people. So it's not, you have to solve both the value for money and the fundamental affordability question. The fundamental affordability question is sometimes overlooked. If somebody's earning several $100,000 a year, they don't think of a car from a fundamental affordability standpoint. But for the vast majority of people are living paycheck to paycheck. So it actually makes a difference if the cost per month for lease or financing is $10 one way or the other. So it is important to keep improving the affordability and to keep, it's just like making the price more accessible. Yeah, exactly. Make the price more accessible, the value for money better, and to keep improving that over time.
But also to make kick-ass cars that people want to buy.
Yeah, it's got to be a great product at a great price, and the standards for what constitutes a great product at a great price keep increasing. So there's like you can't just be static. You have to keep making the car better, improving the price of it, improving the cost of production. And that's what we're doing.
Yeah, and in fact, like I said in my opening remarks also, like the updated Model 3 is a fantastic car. I don't think people fully even understand the amount of engineering effort which has gone, and Lars and team have actually put out videos explaining how much the car is different when it looks and feels different. Not only it looks and feels different, we've added so much value to it, but you can lease it for like as low as $299 a month.
Yeah. Without gas.
Yeah.
All right. The next question comes from George from Canaccord. George, please go and unmute.
Hi. Thank you for taking my question. First, could you please help us understand maybe some of the timing of launching FSD in additional geographies, including maybe clarifying your recent comment about China? Thank you.
I mean, like new markets, yeah. There are a bunch of markets where we don't currently sell cars that we should be selling cars in. We'll see some acceleration of that.
And FSD in new markets?
Yeah. So the thing about the end-to-end neural net based autonomy is that just like a human, it actually works pretty well without modification in almost any market. So we plan on, with the approval of the regulators, releasing it as a supervised autonomy system in any market where we can get regulatory approval for that, which we think includes China. So yeah, it's just like a human, you can go rent a car in a foreign country and you can drive pretty well. Obviously, if you live in that country, you'll drive better. And so we'll make the car drive better in these other countries with country-specific training. But it can drive quite well almost everywhere.
Yeah, the basics of driving are basically the same everywhere. Like, car is a car, traffic is a traffic light, road is the road. It's like,
yeah, it understands that it shouldn't hit things no matter where it is.
Exactly. There are some road rules that you need to follow. In China, you shouldn't cross over a solid line to do a lane change. US is a recommendation, I think. China, you get fined heavily if you do that. We have to do some adaptations, but it's mostly smaller adaptations, not like an entire change of stack or something like that.
Yeah.
Hey, George, do you have a follow-up?
Yep. So my follow-up has to do with the first quarter deliveries, and I'm curious as to whether or not you feel that supply constraints that you mentioned throughout the release impacted the results, and maybe can you help us quantify that, and is that why you have some confidence in unit growth in 2024?
Yeah, I think we did cover this a little bit in the opening remarks too. Q1 had a lot of different things which were happening. Seasonality was a big one, continued pressure from the macroeconomic environment. We had attacks at our factory. We had Red Sea attacks. We're ramping Model 3. We're ramping Cybertruck. All these things are happening. I mean, it almost feels like a culmination of all those activities in a constrained period. And that gives us that confidence that, hey, we don't expect these things to recur.
Yeah, we think Q2 will be a lot better.
Yeah.
It's just one thing after another. Our attacks are crazy.
Yeah, exactly. It's just, if you've got cars that are sitting on ships, they obviously cannot be delivered to people. And if you've got excess demand for Model 3 or Model Y in one market, but you don't have it there, it's an extremely complex logistics situation. So and I'd say also we did overcomplicate the sales process, which we've just in the past week or so have greatly simplified. So it became far too complex to buy a Tesla, whereas it should just be you can buy the car in under a minute. So we're getting back to the you can buy a Tesla in under a minute interface from what was quite complex.
Okay, thank you. Let's go to Colin Rush from Oppenheimer. Colin, go ahead and unmute, please.
Thanks so much, guys. Given the pursuit of Tesla really as a leader in AI for the physical world, and your comments around distributed inference, can you talk about what that approach is unlocking beyond what's happening in the vehicle right now?
So, do you want to say something?
Yeah, I mentioned like the car, even when it's a full robotaxi, it's probably going to be used around 50 hours a week.
That's my guess, like a third of the hours of the week.
Yeah, it could be more or less, but then there's certainly going to be some hours left for charging and cleaning and maintenance. In that world, it can do a lot of other workloads. Even right now, we are seeing, for example, these LLM companies have this like batch workloads where they send a bunch of documents, and those are run through pretty large neural networks. Take a lot of compute to chunk through those workloads. And now that we have already paid for this compute in these cars, it might be wise to use them and not let them be idle, be like buying a lot of expensive machinery and letting them be idle. Like, we don't want that. We want to use the compute as much as possible and close to like basically 100% of the time, make effective use of it.
That's why I think it's analogous to Amazon Web Services, where people didn't expect that AWS would be the most valuable part of Amazon when it started out as a bookstore. So that was on nobody's radar. But they found that they had excess compute because the compute needs would spike to extreme levels for brief periods of the year, and then they had idle compute for the rest of the year. So then what should they do with all that excess compute for the rest of the year? That's kind of
monetize it.
Yeah, monetize it. So it seems like kind of a no-brainer to say, okay, if we've got millions and then tens of millions of vehicles out there where the computers are idle most of the time, that we might as well have them do something useful.
Yeah, exactly.
And then, I mean, if you get like to the 100 million vehicle level, which I think we will at some point get to, then, and you've got a kilowatt of usable compute, and maybe you're on hardware 6 or 7 by that time, then you really, I think you'd have on the order of 100 gigawatts of usable compute, which might be more than anyone, more than any company, probably more than any company.
Yeah, probably. Because it takes a lot of intelligence to drive the car anyway. And when it's not driving the car, you just put this intelligence to other uses, just solving scientific problems.
Just like a human.
Or answering dumb questions for someone else.
We've already learned a lot about deploying workloads to these compute nodes.
Yeah. And unlike laptops and our cell phones, it is totally under Tesla's control. So it's easier to distribute the workload across different nodes as opposed to, asking users for permission on their own cell phones would be very tedious.
Well, you just drain the battery on them.
Yeah, exactly. The battery is also limited.
So like technically, I suppose like Apple would have the most amount of distributed compute, but you can't use it because you can't get you can't just run the phone at full power and drain the battery.
Yep.
So whereas for the car, even if you're a kilowatt level inference computer, which is crazy power compared to a phone, if you've got a 50 or 60 kilowatt hour pack, it's still not a big deal to run.
If you're plugged in,
whether you plugged in or not, you could be plugged in or not plugged in. You could run for 10 hours and use 10 kilowatt hours of your kilowatt of compute
per hour.
Yeah.
Already got a built-in liquid cooled thermal management.
Yeah, it's exactly
expense for data centers, so it's already there in the car.
Exactly. So
Yeah.
it's distributed power generation. It's just distributed access to power and distributed cooling, and it's already paid for.
Yeah, I mean, that distributed power and cooling, people underestimate that costs a lot of money.
Really big deal.
Yeah, it does.
Yeah, and the capex is shared by the entire world.
Yes.
Sort of everyone owns a small chunk, and they get a small profit out of it, maybe.
Yeah.
Thanks so much, guys. And just my follow-up is a little bit more mundane. Looking at the 4680 ramp, can you talk about how close you are to target yields and when you might start to accelerate incremental capacity expansions on that technology?
We're making good progress on that, but I don't think it's super important for at least the near term. As Lars said, we think it'll be, exceed the competitiveness of suppliers by the end of this year, and then we'll continue to improve it.
Yeah, I mean, I think it's important to note also that like the ramp right now is relevant to the Cybertruck ramp.
Yeah.
And so like, we're not going to just randomly build 4680s unless we have a place to put them. And so we're going to, make sure we're prudent about that. But we also have a lot of investments with all our cell suppliers and vendors. They're great partners, and they, done great development work with us. And a lot of the advancements in technology and chemistry we found in 4680, they're also putting into their cells.
Yeah, I mean, a big part of the 4680, or Tesla doing internal cells, was a hedge against what would happen with our suppliers. Because for a while there, it was very difficult because every big car maker put in massive battery orders. And so the price per kilowatt hour of lithium-ion batteries went to crazy numbers, to crazy levels.
Bonkers.
Yeah, just bonkers. So like, okay, we've got to have some hedge here to deal with, cost per kilowatt hours numbers that were double what we anticipated. If we have an internal cell production, then we have that hedge against demand shocks, with too much demand. That's really the way to think about it. It's not like we want to take on a whole bunch of problems just for the hell of it. We did the cell program in order to address the crazy increase in cost per kilowatt hour from our suppliers due to gigantic orders placed by every car maker on Earth. So,
okay, thank you. And the last question comes from Ben Kalo from Baird. Ben, go ahead and unmute. And you're still muted.
Well, I once again would just like to strongly recommend that anyone who is, I guess, thinking about the Tesla stock should really drive FSD 12.3. You can't, it's impossible to understand the company if you do not do this.
All right, so since Ben is not unmuting, let's try Shreyas Patel from Wolf Research. Final question.
Oh, hey, thanks so much. Just, Elon, during the Investor Day last year, you mentioned that auto COGS per unit for the next gen vehicle would decline by 50% versus the current 3 and Y. I think that was implying something around $20,000 of COGS. About a third of that was coming from the unboxed manufacturing process. But I'm curious if you see an opportunity that some of the other drivers around powertrain cost reduction or material cost savings, would those be largely transferable to some of the new products that you're now talking about introducing?
Yeah, sure. I mean, in short, yes. I mean, like, the unboxed manufacturing method is certainly great and revolutionary, but with it comes some risk because, it's new production lines, not. But all the subsystems we developed, whether it was powertrains, drive units, battery improvements in manufacturing and automation, thermal systems, seating, the integration of interior components, and reduction of LV controllers, all that's transferable, and that's what we're doing. Trying to get it into our products as fast as possible. And so that engineering work, we're not trying to just throw it away and put it, in a coffin. We're going to take it and utilize it to the best advantage of the cars we make and the future cars we make.
Okay, great. And then just on that topic of 4680 cells, I know you mentioned it. You really thought of it more as like a hedge against rising battery costs from other OEMs, but it seems, even today, it seems like you would have a cost advantage against some of those other automakers. And I'm wondering, given the rationalizing of your vehicle manufacturing plans that you're talking about now, if there's an opportunity to maybe, convert the 4680 cells and maybe sell those to other automakers and really generate an additional revenue stream. I'm just curious if you have any thoughts about that.
Right. What seems to be happening is that unless I'm missing something, the orders for batteries from other automakers have declined dramatically. So we're seeing much more competitive prices for cells from our suppliers, dramatically more competitive than in the past. It is clear that a lot of our suppliers have excess capacity.
Yeah. In addition to what Elon said, this is Karan, by the way. In addition to what Elon said about 4680s, what 4680 did for us from a supply chain perspective was help us understand the supply chain that's upstream of our cell suppliers. So a lot of the deals that we had struck for 4680, we can also supply those materials to our partners, help reducing the overall cost back to Tesla. So we're basically inserting ourselves in the upstream supply chain by doing that. So that's also been beneficial in reducing the overall pricing in addition to the excess capacity that these suppliers have.
Yeah, no, I mean, this is going to wax and wane, obviously. So, there's going to be a boom and bust in battery cell production, where production exceeds supply, and then supply exceeds production and back and forth, kind of like, I don't know, DRAM or something. So it's like what is true today will not be true in the future. There's going to be somewhat of a boom and bust cycle here. And then there are additional complications with government incentives, like the Inflation Reduction Act, the IRA, which I always found like a funny name for a
comical name.
Yeah, is it like the Irish Republican Army, the Internet Research Agency from Russia,
independent retirement account?
Yeah, exactly. Roth IRA. It's like forest Spider-Man situations, which IRA wins. So, but it does complicate the incentive structure, so that there is perhaps there's stronger demand for cells that are produced in the U.S. than outside the U.S. But then how long does the IRA last? I don't know.
Which is why it's important that we have both Atlanta cells and vendor cells to hedge against all of this.
Yeah.
Okay, thank you very much. That's all the time we have today. But at the same time, I would like to make a short announcement. And I wanted to let the investment community know that about a month ago, I met up with Elon and Vaibhav and announced that I'll be moving on from the world of investor relations. I'll be hanging around for another couple of months or so feel free to reach out anytime. But after this 7-year sprint, I'm going to be taking a break and spending some good quality time with my family. And I wanted to say that these 7 years have been the greatest privilege of my professional life. I'll never forget the memories from, I started literally at the beginning of production hell and just watching the company from the inside to see what it's become today. And I'm especially super thankful to the people in this room and dozens of people outside of this room that I worked for over the years. I think the team strength and teamwork at Tesla is unlike anything else I've seen in my career. Elon, thank you very much for this opportunity that I got back in 2017. Thank you for seeking investor feedback and regularly and debating it with me.
Yeah, well, I mean, the reason I reached out to you was because I thought your analysis of Tesla was the best that I'd seen.
Thank you.
So, yeah, thank you for helping Tesla get to where it is today over 7 years. It's been a pleasure working with you.
Thank you so much. And yeah, thank you for all the thousands of shareholders that we've met over the years and walked around factories and loved all the interactions, even the tough ones. And yeah, looking forward to the call in the next 3 months, but I'll be on the other side listening in. Thank you very much.
Thanks.
Music's playing. So you know what that means, right, Herbert?
Which part?
We have to invite Martin for the next quarter's quarterly earnings call. So Martin, if you're watching this,
yeah,
please come join us. That would be amazing. Thank you.
Okay, guys, this was epic, right? An epic earnings call. I mean, there's just so many things that was said today that just I think it's going to blow investors' minds away. Let's start with you guys. You know, I've got a whole long list, but why don't you guys get started first?
Yeah, I mean, I can go first while everyone else collects their thoughts here. I have about 4 notes, pages of notes, which I'll be publishing here soon for folks on X. I thought the company did a really good job reframing the story away from auto and towards AI, which was something that I think all of us expected them to do. The confidence around FSD, easily the most confident the team has been around that software, I think. And its execution, basically pleading people to go try FSD V12 on the existing vehicles. The commentary around leveraging the inference compute long-term and sort of turning this thing into an AWS model, which Hans has been, I think Elon liked or shared one of Hans's tweets around this, and he didn't cite Hans, which was a terrible thing. Elon, how dare you stealing other people's ideas? My God, this is such a trend. As everybody says. No, obviously I'm kidding. But that really paints the picture as like, hey, there is they're thinking about this, they're verbalizing this on earnings calls, but I think this is multiple years out. I think the commentary around Q2 being significantly better than Q1 will reassure some of the short-term folks, I think, that are worried about a macro, and the fact that he verbalized that 2024 versus 2023 will be higher. I think that's going to put some of that at ease. And there's a lot more there for me. This is really me just filler time, so somebody else can say something smarter than I can right now. But I really do think. Oh, and they weren't really spending. They were trying to get away from the $25,000 or the cheaper vehicle, even though they called out the move to that line to leverage existing lines for the cheaper car. They clearly laid that out on the quarterly earnings call, but they were trying to avoid as much as possible around it. But correct me if I'm wrong, I think they did say that they'll be talking about it on 8/8. So it's not just a robotaxi or cybercab. That was another thing that we heard from them. Cybercab. Or RoboCab. I forget what they said. Cybercab? Did they say Cybercab or RoboCab? Cybercab.
Which
so
is
what does that mean?
Based on Cybertruck,
Right?
which I've been saying for a long time.
Well,
This is
we don't
great.
know that
It's gotta
yet.
be safe.
Let's not get ahead of ourselves here.
It's
We don't know that
It's a
yet.
good marketing gig. It's a
We'll
good
see.
marketing deal.
Yeah. But that was really interesting. That we're gonna get details on these cheaper cars potentially. And there was a little bit of like that Elon sort of optimism where he said maybe by the second half of 2024 we'll start production of these new cars. I highly doubt that'll probably be H1 of next year, late H1 if probably like what was that, June? No, June. So that's kind of where I'm at. I got to go through my notes. I have a lot written down, but those were sort of the standouts. And I think Elon's focus. I think Elon seemed very focused. I think he verbalized the long term very well of what the company is going through. The stock performed. It went higher. It inched higher as the call went on, which is something that Emmett called out. So yeah, I think great call. Really good way to pivot away from the Q1 numbers, the actual numbers, and lay out a future of the company that's actually closer than initially people thought, to get people excited again about the story. So I thought they did a really good job.
One thing that you did not mention is a big one is that, when asked about his concerns about Elon staying, he said Tesla's going to succeed regardless. But then he did say that, one way that it can happen is that if we can generate cash flow, we can buy back shares. That should just make everybody feel a little bit better, hopefully. I don't know if, did you mention this, that they're in conversation with one major automaker licensing
That was another one.
FSD.
Yeah,
That's a big
that was another
one. And a good chance we're going to sign a deal this year, maybe more than one. So we had a few people here saying no way this year. And a few of us, when I asked that question earlier, said yes. FSD is including China. And then the other one he said was, we expect QT to be much better. So this should stop the bleeding.
Yeah. And
Anybody
just
else
to highlight the point about, the buybacks, that was in the context of getting Elon to the 25% control mark. And so, even if they have to buy back a bunch of shares to help make that happen, that's on the table. And so it does, we're going to be making a lot of money. Like there's going to be a lot of money flowing through to the bottom line. They're going to be able to buy back a lot of shares. And that's exciting to know that regardless of what happens, I think, that's what saying without saying that regardless of what happens with the shareholder vote, we're going to probably be able to make that happen.
So I would just say real quick so we can just get it out of the way. Megapack, 24% margin. That's what we've been expecting. I think, Matt, you had some higher numbers than what we've seen in the past, and we're waiting to see this come up a little bit, and it has. And the ramp and deployments will be up 75% over the next year. It may not always show up evenly in the quarters because it's lumpy. It's a big product that ships out in big chunks. So there's a lot going on there. And the fact that we now have confirmation that your car, my car, anyone's car can indeed be a robotaxi on the network. That confirmation was something that people have been waiting to hear because with the introduction of the robotaxi as a concept, there were questions. Would it only be a steering wheel-less vehicle or could you put it out? And it was nice to hear the idea that you can have a friends and family circle who have exclusive access to it, or you can say only 5-star or any other number of limitations and take it back anytime. It doesn't matter. No penalties. I think that's reassuring for investors, and I think it's something they were waiting to hear.
Emmett, do you want to go next?
Sure. Yeah, I was thinking about the buyback comment. I mean, that's good, and I've always thought in theory that would be great and it could contribute, but by itself, it doesn't get Elon to the 25%. I think he's at what, 10, 12, or 13% right now still. So to get them to 25%, you'd have to buy back like half the shares. And, you know, right now, 500 billion market cap, that, you know, that's if the market cap was where it is now. But if the company's generating a ton of cash flows, that market cap's going to be, you know, in the trillions, and then you got to buy back half of that. And then it becomes almost like infinitely impossible to buy back half the shares in this lifetime, you know, in my opinion. So I think it can contribute, and you could maybe get them a few extra percent, you know, slow single digits extra percent maybe, but you know, there really needs to still be something else to get them to the 25%, I think.
Yeah, I guess I should clarify. With some form of compensation, like even if we strike down the previous compensation between some future compensation or making up, like we have to do something to compensate him for the last one. So between whatever we end up getting past for compensation and some buybacks, I think we can get there.
It seems like the most realistic, if this doesn't get, I mean, if it gets held up in Delaware, it seems like the most likely might be just to get reincorporated in Texas, and then I think he can get issued some preferred shares or something like that, for like, you know, super share voting shares, and that would get him comfortable with 25% influence. I feel like that's the most likely path at this point, but we'll have to keep a close eye on the next few months.
I think that's a big part of the push for Texas reincorporation. Not like, I know there's all this other noise, but I think that's the real impetus behind it.
Yeah.
So I think in general, though, this call was so good in so many ways because it dealt with the near term, it dealt with the middle term, and it dealt with the far future. How many times did he keep repeating to DOJO as a service, right? This idea of the inference compute that's sitting in all of our cars. I think it's 3 times in 3 different parts. You know, there's a reason why he's really focused on the inference compute that they're, go ahead. Yeah, Farzad.
There was one thing I wanted to mention. I think it's super important. Towards the end, the 4680 question where Tesla kind of, in a way, said, well, 4680 was kind of a hedge. It was kind of a hedge to fight off the high cost of batteries that we were experiencing because of the immense move towards EVs from the competition, let's say. And now they're seeing the opposite. They're seeing a lot of companies are retreating. They're seeing a lot of companies moving away from it instead of investing into hybrids, which opens up a gigantic amount of production capacity with suppliers, right? And these suppliers now are able to sell to Tesla, where Tesla has the leverage, and they are in a winning position because they can dictate price much easier because these guys are desperate to sell batteries. So when you're thinking about that equation into an environment where they're going to start leveraging their existing lines to come out with an even cheaper car, and with FSD bolted on top of it, you're not just going to get the value prop from the FSD software. You also you have deflationary forces for EVs kicking in heavy because of the reluctancy of those EV OEMs or those OEMs to go into EVs. So I think that is a variable that was a huge one, a huge takeaway for me, because that reinforces that Tesla's ability to lower price and come out with cheaper models will still be paired with profitability, mainly because of that underpinning. Because they'll be able to get batteries at much cheaper than they have been before. They don't even need 4680. They're just going to buy it. So they outsource that essentially. They let everybody else figure it out. They're tripping over themselves to sell batteries to Tesla. Tesla wins. They're the only ones making EV at scale outside of China. Like, how is this not a better setup for Tesla long term? That was a huge takeaway for me too from this call that I forgot to mention.
Yeah, there was. I noted that too. There was a number of things. I mean, they got into. I like how Herbert you framed it in terms of short term, medium term, long term. Short term, they basically confirmed that there was a tremendous amount of stranded supply in Q1, and they said they guided to Q2 being much stronger than Q1. So let's see what that turns into. A lot of those stranded supply issues should clear up. I wish someone would have asked directly, have you solved the Model 3 issues? Because if I try to order a long range now with white seats, it's still kind of delayed. So I think they still have to work through that. It's a very popular model. But they definitely spoke to the short term as well. On the COGS side, they used the term per vehicle COGS reduction. So what that means is that's not just a mix change. That means per vehicle that they were able to take, rather significant COGS out. And I think that's why there's a little bit of a surprise on gross margins. And, again, they continue to guide lower on that, guide cautiously on that, I should say. And again, if I were to break down COGS, it looks like they're event driven and they're inbound commodity driven. Looks like they were able to really take that to the house. And then on the Gigafactory side, they probably had some unfavorability in Q1 with the lower volume. So the actions they took in each factory to deprecate that capacity, both labor and capital, is going to start paying off in probably June on. If they do warn notices, those are you have to pay the labor for 8 weeks minimum. Usually it's different by state, but basically second half of the year, they're going to more right size their capital between now and then the new vehicles coming online. When the new vehicles come online, they've got time to rehire the labor and to bring the CapEx up probably in a more efficient manner as well, given some of the component choices they're going to. That leads me to the next thing just quickly. I think Lars described what's going to happen in this tweener. We call them these tweener vehicles coming out, which is they're going to pull forward a lot of the modules. They call them, and by the way, this is used in the smartphone world because there is an unboxed model in doing that. They're using the term modules, which these are think of the drive unit, think of the electric motor, think of the battery modules. There's many different modules. Think of the 48-volt piece of it and so forth. And what they're going to do is basically be able to do the tooling modifications in the chassis to support these changes and also take the controller count down. There's a number, basically saying there's a number of concepts that they can pull forward and put into actual production from the next generation vehicle. And that way, when they get to the next generation vehicle, all this stuff's been worked through. You get the COGS reductions on the call these tweener new Model 3 and Y and whatever other vehicle types they're talking about. And then the 25K vehicle, that platform really becomes about unboxed and becomes about process time in the factory and all the new CapEx in the factory. So this actually helps de-risk the next platform and helps Tesla de-risk their path to the next platform because they don't have to squeeze the existing 3Y rock, as much as for people were getting concerned about. Now they're going to have all these event-driven actions to take the 3 and Y COGS floor way down. Again, maybe somewhere in between, 18K and where they're at today in the 29 to 32K range. Sorry, long-winded.
There's a lot of predictions that people are making on this panel today that was right. Well done, Jeff. And the things that you were calling out earlier, you were mentioning that even for anybody we're talking about it, that they might use the unboxed model to kind of create, to implement it into the Model 3, Model Y. They confirmed that. The idea that just autonomy, man, they were just talking so much about autonomy is you got to believe if you're an investor in this company, don't invest unless you believe autonomy is going to happen. And their confidence level. And then they said, even Ashok said, right, that we can actually see and we can measure the rate of progress. These were things that I know Hans said. We were talking about that a while also. So just so many things that my list is 10 line items of the things that we did not know, but now that they've confirmed, that is really important information for us. He felt very confident that FSD is going to happen in China. And then, we can tell you now the 12.4 and 12.5 are much, much better. And then I am shocked a little bit that 8.8 is going to be way more than just the reveal of the Cybercab, this new robotaxi. They've already shown us the app, but they might actually show you other vehicles and might actually show you the some sort of production level, right? What was the comment that he made about that kind of inferred that was the case?
Yeah, that was when he was asked about the plans for the next generation vehicle and getting a specific announcement for the $25,000 car. And he said, you'll hear more about those plans on 8.8.
What do you guys think that meant?
I think we'll hear more about their plans on 8/8.
That's exactly what I was gonna say.
Bugger.
I'll tell you what, the biggest surprise to me was that obviously the say questions are pre-asked, but what surprised me was all these institutional investors who know so much more than us. Nobody asked about the ride-hailing network app that they teased. Like, not a single question. Like, that just, like, nothing, poke, prod, anything. That was wild to me, especially with Uber being down. And, I mean, man, that was just a miss to me.
These are not always the brightest people. I know they like to think that they are. They certainly sell themselves to their clients that way. But even the ones that are actually really good are covering 10, 20, 100 companies. So they don't have the kind of live it every day understanding that some of us do. When, I do cover other companies, but to such a small degree that, I don't know, I'm just a lot closer to it. And I think that when they found out that they could be one of the analysts asked a question, they just got so excited they shut down and just went with what they wrote yesterday.
Does the panel feel like Elon did a good enough job to assuage concerns about his interest in Tesla and his future in Tesla?
Doesn't matter what we think. Stock's up 10.9%.
And I would agree with that. And I would say that really the biggest risk for the only key man risk I can see is alien abduction.
I will say it's kind of hilarious. Like, I'm just looking at X right now, and it's comical to watch like Ross score. I'm gonna be the not nice guy here, but it's kind of hilarious to watch him squirm here, trying to find anything, trying to post random things about why it's such an issue about the earnings and all that. And now the last thing he has to grasp on is saying, oh, that's it. That's the final straw. Martin Vieca's leaving. That's it. Like, it's all, everyone's gone. I'm like, are you serious right now? The IR guy? Like, don't get me wrong. I love Martin. It feels like, he's
there's a narrative he has to uphold. There's a narrative.
Yeah,
there's a narrative he's got to uphold.
Yeah, the narrative is, buy high, sell low, right?
Yep.
Well, and if he had a good working relationship with Martin, he'll have to create a new relationship with whoever fills that role in the future. And it's entirely possible the next person will see through some of the nonsense out there and not be perhaps as likely to invite him to events.
I don't know, guys. I might have to sell. If Tesla's IR guy is moving on, then I don't think they can actually solve autonomy. So I'm
you should start
really
a fund.
Concerned.
Yeah. I don't know who it was that was speaking, but when they were talking about 4680 and they're talking about the batteries, I guess it sounds like whoever's going to be replacing Drew, they spoke very eloquently and definitely seemed like they picked right up.
That was
Lars. I don't know who that was. That
was Lars on the
Lars?
engineering side, and that was Karn talking about the supply side of it.
Okay, Karn's who I must have heard. I wasn't familiar with his voice.
All right, let's ask the panel here.
Yeah, Drew's replacement, two completely different skill set.
Okay.
Which of these? What did you hear that was the most important? The one that you're most excited about? For me, it is Robotaxi. It's the licensing, the potential licensing. One major automaker licensing FSD. We're in conversation with that, and we expect to sign at least a deal this year, maybe more than one. That is the biggest one for me because obviously he made comments about the bot, but the bot is for next year and onward. How about you guys?
For me, it's them being able to have access to cheap batteries because no one else can make EVs profitably. That underpins the entire business.
Yeah, it's chips all over again.
For me, the most. Oh, you go first.
Go for it, Emmett. No,
I was going to say the bot. His conviction still upheld in the bot, and that an aggressive timeline of end of this year working on the factory, maybe, and working within Tesla, and the end of next year maybe selling it externally. That's going to be so incredible when they start taking orders for a humanoid robot. I mean, I'm going to order 100 of those things and just like have an army of them or something. but it's gonna be so crazy. This humanoid robot, it's just gonna get more and more advanced, super fast. I mean, I'm so excited about that. I am most worried about key man risk. I mean, it's great to see Elon focused as well. He seems to be refocused on Tesla, reprioritizing Tesla, despite all those other endeavors. But my concern is the targets on him from all over the world now. I mean, you got Brazil, you got Australia, you got other socialist, you just have so many. He's so involved geopolitically at this point that I hope he has the best security ever, because there's a lot of people who wish he did not exist right now, and that's my biggest concern.
There was actually a thing on CNBC yesterday morning. I'm one of those people that watches Squawk Box every morning before the gym. But there's a thing on CNBC saying that Elon Musk actually had the highest cost for security year over year than anybody else in the world.
Good. Should probably be even higher. Yeah.
So I'll pick a different topic. Oh, I'm sorry. I'll let you go in a sec because mine's going to be super quick. Just to pick something different. Those are obviously huge. Farzad's right about batteries, and everyone's right. But a lower one that I am excited about is confirming cloud compute in the cars. I'm sure it's something you can opt out of if you're worried that your chip is going to wear out, or maybe they'll extend your warranty on the chip. And I imagine they would pay you more than your electricity costs to use it, and only use it when your car is sitting. It's another very, very small revenue stream, but if they want to give me double my power back on it, take as much juice as you want, this would be the largest, most powerful computing cluster in history by a substantial margin. So I think that is an opportunity that would be, fantastic, and it's good to hear that it's a possibility.
Yeah, Brian, edge computing like that is the biggest TAM in computing that nobody has been able to really crack the code on that. And yeah, if Tesla could do that, that'd be huge, but it's extremely difficult to get edge computing like that and be able to interlace it, deal with all the networking for it, right? I mean, AWS does a great job with it, and that's why Netflix works so well, Prime works so well, but it's very difficult. But the TAM is huge.
And one thing they said on the call, which I think is important to point out, is one of the huge benefits that they have in built is the cooling essentially built in. I mean, the problem with a lot of the main clusters or any data center is you've got all these computer chips super close to each other, and then you've got to have a huge amount of cooling, and that's a huge amount of additional capital costs and also parasitic load, so extra use of electricity to run the fans and coolant and all that. So if you're instead can just tap into a very small computer that's drawing 50, 60 watts, something like that, in, 40, 50 degree ambient weather many times of the year. That's a very nice benefit. Somebody just posted on X, no idea if this is accurate, but it seems about right, that they did some quick math and came up with around $300 per car as the revenue opportunity, assuming, some stuff around utilization. And the electricity costs on that would be very low, just because the draw on the FSD computer is so low. So it's, small. It's not going to be the sort of thing that completely changes the company's financial performance, but it's a really cool idea, and one that I think, is just accretive, and I think helps to change the mindset of Tesla as this, AI and kind of services based company, instead of just, there's just an auto company. Look, the sales fell, so Elon bad. It's just, I think they did a great job of changing the narrative this quarter.
Just to clarify what you're saying, though, I did an interview with Brian Wang, and he calculated that the individual car owner could earn $250 to $2,000, depending on what happens, for you to rent out the inference chip in your car when you're not using it. But for Tesla to have a DOJO as a service, that is a massive business. And he's talking about it. At some point in the future, there'll be 100 million Teslas. He said that number a few times. 100 gigawatts of compute distributed around the world. That is not a small business for Tesla.
Yeah, make sure, let's be very specific. There's two different things between distributed inference compute and DOJO as a service. Those are two different things.
And the other thing to keep in mind, yeah, like that sounds really great, but those cars will also be running as robo taxis most of the time. If Elon's vision comes true, so then you're not going to be doing distributed compute. You're going to be doing rideshare, and that's a much higher margin, much higher revenue dollar stream. So maybe there's a nice opportunity where you can further optimize by getting some passive revenue while the car is parked at 2 a.m. or something like that. That's great. But I don't think it's you have to kind of look at the use case and say, okay, if robotaxi, then you really have to scale back the utilization that you're assuming on the distributed inference compute.
He specifically said that even a robotaxi, there's still 100 hours per week available.
Yeah, the way that would work, it's like, so again, AWS, we'll use that as the example here. EC2 instances, there's a spot market, right? So normally, if you know what your load's going to be, where you're going to train, you got to be certain hours, you'd buy a savings plan. But if you are intermittent and you don't care when the function needs to run, you can buy on the spot market, which is way cheaper, right? So you can be like, hey, yeah, just run this Lambda function at 2 a.m. No big deal. I don't care when it executes. And that's how I think that would work from the inference side. So we can do our training when other people are asleep, maybe across the world, et cetera. But again, just to make sure we're drawing a delineation here, DOJO as a service, that's extremely high profit margin. That I would say is more akin to AWS, whereas the inference side of it is more akin to like the EC2 spot market.
I mean, I would say for me, this is probably the most important earnings call that we've had in a long time. I think we're going to look back on this in several years, and this will be one of those calls where it was viewed as a turning point in the structural type of a company that Tesla is. That, they mentioned this in saying we're reorganizing for the next phase of growth. We've heard all sorts of talk about all of the software things that they're moving into. We got teased with the robotaxi app. One of the big announcements that we heard today that was confirmed, we've kind of heard this before, but I wasn't sure if they were still committed to this plan, and Elon mentioned it, is that they're going to have their own vertically integrated robotaxi fleet, and that customers will be able to add their vehicles to the Tesla network. And so, we'll have to see if there is any sort of licensing to other vehicles of the ability to participate in that network. If other car companies actually purchase those vehicles, or the licensing agreement for the software running on top of the hardware that Tesla uses. We had lots of confirmation about, like how long it's going to be for other OEMs to adopt this technology once Tesla has it working, even for the first ones. And all of these things, when I have talked about this becoming the AWS phase of Tesla's growth story, what I'm talking about is not necessarily that they will be able to provide a service that kind of looks like AWS. I'm talking about the fact that the entire company now is running high margin software services on top of running high margin software services on top of all of this hardware infrastructure that they have put into place for so long, and that the entire company moving forward, the value of every car that has been delivered in the past is now significantly more than it was, and the value of every car produced in the future is significantly more than it ever was in the past. At the same time that everyone else is pulling back on all of their investments, and Tesla is pressing forward on all of their investments. They're investing not only in batteries, they have access to more batteries, just like Barzad said, from all of their suppliers, so they can kind of pull back maybe on investing in 4680 ramp. But instead of doing those things, they're investing heavily in artificial intelligence. They're investing heavily into ramping up capacity, and accelerating their plans for bringing new vehicles. Like, they have pedal to the metal literally at every area of the business, at a stage where the margin profile moving forward is going to inch closer and closer to, a high margin SaaS company and away from these low margin, vehicle manufacturer type businesses.
I would say in the comments that if there's things we missed, you got to tell us, because at least on my channel, please do fill up the comments. I will read them. I'm sure a lot of people are very angry that we're not upset, but I heard a lot of hopeful news and only a little bit of bad news. So I don't know about you guys, but I'm feeling better than I expected I would be.
Sometimes I think it's important with these calls also to think like, okay, how much of our mood is really dependent by the stock's reaction? Like if the stock was down another $10 after this earnings call, would we still be happy with everything? I don't know. It's hard to say, but I do think Elon was in the right mindset, refocused, and he's just reframing Tesla as an AI FSD, company of the future versus an EV manufacturer. I think that we're in the process of that.
Yeah, that's a good point, Emmett. But what I would say is, they essentially just announced new products coming out either at the end of this year or first quarter of next year. Like that's reason to be optimistic despite the stock, right? That's stock aside, that's company specific. And I think that's bullish, just on its face for the company's performance. And then also, just it seems like A8, to Herbert's point earlier, is going to be more than just an unveiling of a vehicle. It looks like it's an unveiling of a vehicle, the network, AI driver. I hope I'm not butchering his X name, but he was zoomed in. He brought up a good point. Is this the new visualization for what's to come with the FSD? Like if you zoom in, it actually looks extremely interesting. So I don't know. I think there's lots to be optimistic on. Numbers aren't always everything. Like I said before, we're in a weird place with the economy. All the automakers are having their own challenges in general, but I think long term, this is going to reflect the same. History just repeats but doesn't repeat but it rhymes, right? We're not repeating the same issue with the chips, but here we are with the batteries. Here we are again with these automakers pulling back. And what does that mean for Tesla? Well, they get to take advantage of this. So, I think stock aside, I think there's genuine reasons to be bullish without us just being in an echo chamber, which, straw man me if you can on that one. But
I think part of this is the stock was so beat up over all the stuff that we already knew. And so, if the stock had rallied into earnings, this would be a different story. And I'm sure like the commentary would be a little bit different, but this is what we've been talking to a lot of our clients about who are, struggling with stuff. And like this sentiment is extremely low right now. And like for sentiment to continue to go lower, you would need some serious surprise. So I think it's something of a situation of like the stock probably got overly beat up. Everyone could see every single problem. And then now there was actually a couple bits of nice news, some nice job like reframing the company around AI. So it's like, this is the appropriate reaction to the stock in my mind, when they've kind of reassured around some of the near-term challenges and also did a great job repainting the picture of the future business opportunities. I don't think this is us being delusional. I think this is, the market overreacted on the way down and now it's kind of recorrecting and saying, oh yeah, like there actually is more growth beyond Q2.
Should we end it there, Herbert?
Yeah, just give me a couple more minutes if you guys can just
sure.
And I'll
so one of the things I did want to add to that was, back to a fundamental standpoint, the fact that they publicly announced that they had grown their compute so much, is a big part of what reassures me in their ability to execute on these plans as well. And we knew that Elon said, hey, we're no longer compute constrained, but we didn't know what that meant. So to see that chart where they more than doubled their compute capacity in the last quarter is a huge factor in all of that, because it had been basically radio silence. They had not given us an update on that chart. They didn't let us know, are we on track to meet our 100 exaflop goal? And the lack of any sort of public facing updates on the status of DOJO and their training compute really did leave some room for open questions. So the fact that they finally came out and addressed those questions directly, we know exactly where they're at today. And it seems like that whatever it is that they're doing is scalable, and they can continue to even add more compute. That plus the progress that we've seen on FSD is another thing that says, that whatever they're seeing internally really is giving them confidence. It's ahead of what we're seeing, and what we're seeing is already incredible. So if they're seeing stuff that's better, faster, and higher quality than what we're seeing today, that by 8.8, the quality of the software that we're going to be seeing in the car should be huge. And I did want to point out one comment that Ashok made specifically. He said, he was talking about doing the safety and the QA work, and he said, working off of the previous week's build. They are doing a new build of the FSD software right now every single week. That is the rate at which they are progressing FSD software. And I think, we have been in various versions of 12.3 now for a while. We could very easily by 8.8 be getting to a rate where we're getting point releases of 12.3, 12.4, 12.5, 12.6, and not having all these 0.3, 0.4, 0.2, little minor tweaks to these models, but actually large levels of releases every single week. And that type of progress, just means that we are accelerating towards that robo-taxi level functionality at a pace that is beyond anything that we've ever experienced in the company up to this point in time.
Wonderful. Thank you so much. This was a mega panel, mega stream, fantastic day. Thank you everybody for participating. See you soon. Bye everybody.
Bye everybody.